Guten Morgen. It is July 20th. Hope you guys had a good rest. We're going to be streaming stocks, options, futures trading today. Market just opened up. Big rip up out of there. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT, as well as on our Discord server. Link for those are in the description. I'll put a Discord link in chat as well and pin it. Thank you guys for your support. Getting kind of a slow start here this morning, but we're getting it set up. One step at a time. Market sold off last night from the earnings. Tesla, Netflix, some big earnings last night, but as you see, big bounce. So we'll see where it goes today. Could have be making a head and shoulders on the longer time frames, or we could still be in this bullish channel. They'll have to see what the day brings. But so far, nice bounce up to yesterday's resistance there. You see, pretty straightforward. Morning, Sean. Yo. And good morning, Hugh. Good morning, Molava. Good morning, Zoomy. Good morning, Tasty. Good morning, Tyler. I think barbecue has to build that handle. I think yesterday was kind of a false breakout, but see on that one too. So the fact that it's kind of chilling up here is a good sign for it being resistance and that it'll come down. Building kind of a right shoulder here on this head and shoulders too. SPY just broke that high. But yeah, if it was going to break out, I mean, it could do it any time of the day, I guess. But it's not yeah, it's not something I'll be getting into unless we do get a break of the cup or show some reversal off of a handle. The handle, I mean, it only has to really come down to, doesn't have to come that deep. Literally where it's at right now could be the handle. Looking at these fib levels, so is that true actually? Yeah, it depends on how far down you draw your cup. How far up you draw your handle. Or yeah, just your cup. You take it from this high. You need to come down a little more. That's probably more accurate since that was kind of a false breakout. But more something like this. And then the low, I think the low is about right there. Yeah, MACD flip bearish. We got red into the 9 moving average. I think it'll come down before we break out. That's what it's looking like for now. Got a big gap up on TTOO. Not sure what's going on with that. Pac West is up another 5%. Wow. That gas is rallying. Could be a little double bottom here on barbecue also. I don't know, I feel like it has to come a little deeper for this handle. Roots up 7%, close up 4. Links down 2.5. Punk goes down 6. Zooms down 1%. First solar's down 1/4. Snaps up 1/2. Lucid's down 2.5. Teledoc back in that range. Didn't like that breakout area yet. Run as well, actually. It's down 4%. Lifts down 2.7. Here where these start to shake out. With the market kind of gapping down. These might still have the strength. Fisker down 2.5. Egg is up 0.35. Caribbean's flat. Barbecue's flat. Okay. Barbecue getting a little love. Red to green. BBIG is down 5. That might be pulling back to hit this trend line, hopefully. It's funny, after all the PP shows I've heard and all the different people on there, it was Houston Wade that got me bullish again. Just hearing someone from outside the echo chamber helps. Know what I'm thinking, Poison. Good morning, Hamza. But handles, they don't have to go that deep. But they can go as deep as 50%. So yeah. Deeper the better. 32.62. It's hard to know where to draw your cup is. But I think that's probably pretty good. I've got the left side on that first cup. Because over here it looks like we did a false breakout. And now making a head and shoulders. So that's why I'm using this high, not this high. And then the low, I'm using it where there's the bottom of this day. This day cruised through and we have those wicks down there, but not those wicks. I will if it keeps coming down and starts to reverse. I need to bring that down. Let's see. 5 on BBIG, TTOO. The news on this. I don't know of any news. FDA breakthrough device? Okay. Well, it's coming down. Roots up 7.8. Longeveron up 6. And Matt's up 6. Maybe a good opportunity on some of these to get long exposure. Nirvana comes to mind. Yeah, his explanation on MMTLP was good. I've heard bits and pieces, and I've not heard it spelled out like that. That's insane, actually, what all went on. I knew there was like some splits and some dividends, and I had no idea it was like it happened multiple times. Yeah, really interesting story. Morning, J Souls. Yeah, I never actually. I mean, I don't know. I maybe traded a little bit. I can't remember, but I was never knowing any of that DD when I was trading it. Yeah, that was a while ago. You've been around a while, Joshua. Morning, Guts. Mullen. Saw you, Mullen, peeking up there. Mullen's up 4%. Maybe a little double bottom on Mullen. Cat's up, OST's up, Tops is up some more. Barbecue down 2.5, 37 cents. We're either going to get this head and shoulder built and come down, or you've just consolidated a much larger channel of buying. If that's the case, look for an inverted head and shoulders. This being the first shoulder. TTOO coming down. Yeah, I fell in that gap. And Matt's up 8. BBIG down 5. Nickel's up 6. At that chart. Tesla's down 5. Sold one of my shares in the long term of Tesla last night after that earnings. I'm gonna probably keep scaling out of my long term. Tesla could have one last push up here, I think, a little higher. 313. But it's got 3 RSI divergences on here. So I'm not all that hopeful. But you do have a cup handle and it broke out. I don't know. Big Barbecue setting up for some barcoding and a Friday sell-off. Or today. We bounce tomorrow. See, GME is down 0.5%. Did you see that article of the big short guy that has a short position? Just saw the headline. A short on GameStop. And some SPY puts. All right. Sure thing, guys. Glad you watched it. Those don't get as much love as my TA on Bank Trip Chapter 11 OTC stocks, as Jerry Diamond so eloquently puts. On GME, I'm just waiting to see which direction wants to go here, pretty much. Be that easy for me. Might be setting up for a good short though. Yeah, no, I know it's a little different demographic. People watching YouTube. But hopefully it intrigues people enough to research a little bit. I mean, that video I put wheel kind of because when I did actually have just running that wheel account, and I would update it, and that was like proper wheel. You know, I'd let stuff get exercised. Now I'm just basically just running cash secured puts. Anyways, when I would do that though, it actually had some traction. Well, I was just stuck with that account and that whole kind of series of videos. So that's kind of why I put that in the title, because it is the wheel, but it's even more simple than that, because I'm kind of just doing the one leg. Down 2.5% on barbecue. I wanted to. Oh yeah, I want to get into Zim. Tesla's down 5.25. Flex is down 7. Tops is having a bit of a sustained rally, huh? Speaking of, Rally Vermont, are you in this still? A lot of volume on it this morning, wow. What's HKD doing? Might be a nice place to park some money. Wait for a pop at $6. Or to Jeff Brands. Lies coming down a little bit there. Morning, Bruce. Never give up. Never surrender. That's true. Options are, I guess, more tricky than just buying shares of something. Just holding it until it's worthless. An NDM? Yeah, it was looking good actually, I think, an NDM. Yeah, it broke out of this kind of range right here I liked. Have to keep looking at it. Those aren't very liquid. I'd like to see it pull back, that breakout maybe. I don't really know why I stopped. I guess I've kind of started back up though. It's not something I need to update every day. I mean, the wheels is, you know, playing options is a kind of a slower strategy. So I need to do it on a Robinhood account. That'll help. That helps with the viewers. Easier to see also, just visualizing. Ugh. Zim was trading. Let him burn. Zim was, yeah, a squeezy one that offered like a $75 dividend or something crazy. What was it? $17 dividend? Yeah, I was trading at 43 bucks when shipping prices were crazy. It'd still be a good buy. Shipping prices have come down a ton now, though. Last I checked, they were back to pre-COVID levels. With being in a recession, probably keep coming down. So that's the risk with that one. BBIG is down 6. Barbecue's down 3.2. Spy's coming down a bit. Tesla's coming down 6.5. Net gas is ripping a bit. GNPX is up 4%. Crude's up 4%. I am root. Matt looks kind of interesting. Just can kind of break out of this right shoulder. Tops is up 9%. Highs coming down here. New low of the day. the call premium begins to burn. Everything's taking a bump in the brakes. Dollar's down 2.5. New low there on SPY. Barbecue down 3.6. See if we get a little inverse cup here in the futures. I guess you can see with extended hours. Yeah, there you go. We should spike them down yesterday. Retest 449. It's too early to tell. If we do come down, 449 would be a stretch. Yeah, I'm not sure it'll happen that quick. Well, 449, that's way down here. Pretty far. It's pretty far down. You know, after this insane rally, if we are actually flipping around, it's going to take some time. So it's still not even decided for flipping around yet, so this could just be rebuilding some liquidity before we keep rallying. GME is down 1.5. BBIG down 5.8. Johnson & Johnson up on earnings. Clove started a nice little rally there. This one used to squeeze. Tesla's down 6. Up is down 6. American's down 6. Carvana's down 7. Wish is down 7. Netflix is down 8. Well, we got a late start this morning, but we're here. Market didn't go anywhere. What do you know? Thank you guys for joining this morning. Thank you for your thumbs up. We're at 17 likes on the day. I appreciate it. Much appreciated. Barbecue's down 3.9. I'm gonna see if it's gonna build a handle here. Let's look at how it did it last. Last handle it built. This big one here. Took like a week. I was slow on the trigger getting back into this. Just wasn't even sure if I wanted to get back into it in general. But yeah, we'll see where I'm feeling this time. With that said, though, I can be more aggressive with my entry. I do want to trade it again. Let's see, once it broke this high. Actually, yeah. Yeah, that was kind of that same day. There's court hearing that day also. Yeah, then you have kind of inverted head and shoulders here too. Breaking out of that resistance. There's a little dump on barbecue. Broke the low, 36.10 down 4.5. So we'll just be looking if it's actually see it might be the same trajectory. Am I looking at Marley? The pitch. Voila. Maybe. Eyes coming down here. Did have a short. I closed a little early. Well, look for a bounce and a handle on this thing. When you wish upon a star. Here we go. Might even take the up. Yeah, might as well take the bounce, the handle bounce. If it does it. A little flush through it. Grab some stop losses. Oh, I had to order to close my short. It's so annoying how it does that. It's fine, I got a nice entry on that long, if it does bounce. I had an order to close my short right here at that low. And it already closed it. And then it just turned into a buy order that triggered. Like, and I was just about to go to buy it, and I just like bought it. I thought it just front ran me. That was weird. Yeah, you always have to have your order book open on. I don't know if other brokerages do that, but at least on E-Trade. Because one order does not cancel another one. At least not with the futures. I did take a look at Tesla, yeah. I'm watching a little bit more now because I'm scaling out of my shares on it. It's too soon to see if it's actually hit a top. But it's getting close to that. You kind of have this trajectory you had. So yeah. I don't know what your plan is with it, if you're trading it short term or long term or what, but probably could keep coming down until at least this 266 for a potential bounce. 65. Oh, spicy, a little more fleshy. Let's see. I think it probably wants to bounce here, but doesn't have to. Oh, there's a new low on it. You can get out today if you can. Got a lot of catalysts still. You have more earnings. You have JPOW next week. So with JPOW you could always get an exit out, even though there's not much time left on shorting coin. Yeah, it doesn't look bearish yet, but yeah, we're just trying to catch a resistance. It's at that resistance. Upstart's down 6. Barbecue did bounce there a little bit. There's an RSI divergence too on the 5-minute. Interesting. Don't want to be too impatient for this handle though. This last one took so long. Given this cup was over a shorter time period, so I'm assuming this handle will be also. But I would think I would give it at least till Friday probably. Eyes flushing down more there. Should have held those shorts. Wow. BBIG down 8. $7.7. $8.3. See, Matt's been ripping 16% there. Sure, Hamza. Why do Scipio must like his explanation? Oh, because I'm Matt's ripping. Barbecue new low there. 35.50. It's down 6.3. I think it's down 4% almost. Spy's not really making this inverted cup. I wouldn't, I wouldn't say anymore, because it's fully cruised past that right side of it. New low there on Spy. Barbecue wick down there. Oh, where'd it wick to actually? Whoops. 35.10. Down like 8%. You saw that it's because they're the preferred supplier of transparent conductive films. Oh, that's the catalyst for MMAT ripping? Or for the next stop? bounce before then. But you kind of see this bigger inverse cup being formed now. So kind of just looking for short entries. Maybe retest of this break of the low. Whoa. X down 5% is the thing. The market can just turn everything around so quickly. I need more of last year. Yeah, that's not the best on neg. Don't like that. Bad day to exit stuff, but longs. Lift is down almost 6. New low there on SPY. Wow. BBIG is down 8.2. .6% on neg. Around it. Doesn't look like it's off a cliff. Not yet. Really a flesh wound. How much that thing's rallied. Rally, are you in tops? Up today, 6%. A lot of volume too. Yeah, I might look for an entry on Carvana. Not today, but I don't know what kind of retrace we get. Yeah, all the runners the last couple of weeks are down today. Market's just kind of sold off. Pulled everything with it. The swing today. Hopefully not. You're not in top, but you're in tops. Six to 8.5. Yeah, I've got 265, 70. Oh, that's support. Or potential support. So the dip got eaten up yesterday on barbecue, but it was legitimate change of course, it would appear. I maybe didn't get the best exit, but so far was the right move. $35.60, it's down 6%. See if I can reclaim some of these. Oh, it's actually, there you go. Could be a cup with this right here. First cup. Looking on too small of a scale this morning for that little one. I shouldn't have closed. They respect some fib retracements here. 50% would be back to open. No news, not that I know of. On barbecue, no. News on the market? No, just earnings. Tesla, Netflix earnings, a couple others. We're in earnings season, so even good earnings are selling it off, which is to be expected with the massive rally we've had into it. And earnings is just a time when big money can get in or out, regardless of what they actually are. Eight and a half % down on BBIG. GFAI is ripping. 8%. Guard Force AI partnered with Concord Security PTE Ltd to launch a new robotic security solution. Maybe that's what it's on. Finger motion up 5%. A very pretty chart. A lot of action this morning on the SPY. And barbecue, I guess. Armin was sold for 200K. Was it? The whole thing? That come out today? I haven't seen that yet. Like at 14, 16? It might be. It might be, Duck. %15 on MMAT. GFAI 27%. Buys climbing back up here. Zim is actually up 1%. GME down 2. Carvana's down 13. Wish is down 9. Netflix is down 8. Wow, things really selling off. 0.7. Tesla down 6.8. Oh, SPY made it back up to the pre-market low. Maybe where it finds resistance here. Also the 23%, 23.6 raise. Retail Holdings bought Harman portion of the Harman portion of BBY for 200K. What? Oh, that's the name of the company that bought it. The name of the company, Harman Retail Holdings LLC. Okay. Rack space down 8. See if Carvana starts filling that gap. Buy climbing up a little more here. Barbecue down 6%, 35.60. Party City down 68%. Gave back all those gains with one transaction. Isn't it nice that barbecue is not like this? Sounded like it was buying itself. Yeah, so it's not an existing company, I guess, that bought it. That's strange. $0.34 gap fill all this morning. Oh, that's true. There is a gap down there. 34, good call. That'll put it right at that 38 38.2% retracement too. That could be the handle.
Investing to improve their services for their members. That third quarter, they anticipate the revenue to be approximately $8.5 billion versus what we had been expecting at around $8.7 billion. They do also expect their third quarter earnings to come in around $3.52 per share, which is slightly above $3.24 per share.
Here's SPY, made it to VWAP.
Reflects the lower cash content spend in 2023 than initially anticipated due to the timing of production starts as well as this ongoing strike. Now, we're seeing a lot of analysts today update their coverage naturally when we see such a move in Netflix shares. Not unusual to see analysts then follow. This name does have 11 buys, 20 holds, 2 underperforms, and no sells. But it's interesting to see the average price target at around $420 a share does imply even further downside from where we're currently trading with shares down, I mean, at this point, 8.7%. So analysts do see this name normalizing. And I think what we're seeing from Netflix is signs of a more mature company. The stellar growth and the metrics they were able to put up for the last several years, I think, are cooling, just given the fact that they're finding their footing in the streaming space, which is extremely competitive, as we know.
Understood. So when I look at the S&P 500, the third worst performer is Netflix. The first worst performer of the day on the S&P 500, and I'll tell you number 2 so people are not left wanting, right? It's Discover, Equifax, Netflix are the top 3. Discover Financial is the biggest loser. What's going on there?
Discover Financial with its own set of woes here, and it almost makes Netflix's move to the downside, like you said, look relatively small. This name is selling off on the session on better than expected earnings, but a pretty negative report, as well as this FDIC probe. And the story is really interesting. The company said that in the beginning of 2007, it incorrectly classified certain credit card accounts into the highest merchant pricing tiers, which affected pricing for certain businesses, but not its cardholders. The mistake was not material to its financial statements,
I'm
but
closing my longs there.
Corrected, they said. Now,
I'll maybe get back in if we make
$365 million to provide refunds to its merchants as a result
like a shoulder.
of
I have an inverted head and shoulder here.
The company even said, given the differences
This
in
low.
individual merchant agreements as well as changes to network terms and
Otherwise,
of historical data, it's
I think this could be a handle on this bigger cup.
The exact amount of these potential refunds. So that is not good. And external
But being back at VWAP, could just hang out here for a while.
With its regulators, and the company did receive
Chop people in and out.
Consent order from the FDIC in connection with this ongoing story. So this really, I think, then completely erased any sort of gains we would see from these earnings, which were
Got some Beto calls for next week.
We saw sales beat expectations. Their second quarter EPS did also come in better than expected. They ended the quarter with around $118 billion worth of loans. This was up 19% year over year. Most of their figures in terms of their revenue breakdown were actually stronger on a year-over-year basis. They also repurchased approximately 6.8 million worth of their shares for $700 million. But this name now halting its buyback program, I think just showing the potential impact they're bracing for as a result of this FDIC probe, Nicole.
Thank you so much, Jenny Horn. Great to see you, markets correspondent. Appreciate it. Let's get some insights in the news shaping the markets and some stock picks for you. Teddy Weisberg is here, founder, president, Seaport Securities, the man who picked Meta, Facebook, 22 years ago, or what?
Good, I
the
might
day
get
it
back in.
launched, and
The
you've had
VWAP, which sketches me out, but
and it's hit new highs and new highs and new highs. So I am going to circle back on that. I do want to ask you on that. But in the meantime, with the markets, S&P is about 5% away.
look, they got Warren
from its
Buffett.
record high. The Nasdaq about 11%. We're waiting on the Fed. And people are still talking recession. Where do we go from here? What are you thinking?
Well, obviously the markets are climbing a wall of worry. You know, the rhetoric continues negative. The market continues to act well. The good news, Nicole, about the market now, at least the last 2 or 3 weeks, is that the market breadth has improved dramatically.
Right.
And that's a really a good sign. You know, I mean, you've got, what, a handful of tech stocks that have kind of been driving the train, you know, for the last 6 or 8 months, which is terrific if you happen to belong those names. But for the rest of us, it's been pretty frustrating because everything else is kind of languishing and really not doing very much. So that dynamic seems to have changed, which is reinforced by the fact that the Dow transports continue to make new highs. And if you believe in the Dow theory, and a lot of young people today don't even know what the Dow theory is, but the Dow transports are critical to the overall direction of the market going forward. And it's a real message about the U.S. economy, which is positive, not negative.
Right.
So I mean, there's a lot of good stuff going on now, and the fact that we're in the middle of earnings, and as usual, earnings are coming in better than expected, particularly what we saw with the big money center banks.
So your SPY puts?
So with that being said,
You green on them on that drop?
Dow theory, right, with the industrials and you have to see them all moving higher, not just one thing.
I mean, you're like swing trading those, but
Dow, industrials, and the transports moving up, right? So at this point now,
I'm not sure if
good news.
today's drop
We've
so
seen a lot
far.
of good news. In
Yeah,
fact, the New York
it's
Composite
probably still
Index
bearish.
is making new 52-week highs, and
I don't
that is
know.
a good, broad-based.
I don't know if that's enough of a sell-off
Because it has all
to
the
warrant
names here at the NYC
that.
and the ADRs international. So at this point now, are you worried about the Fed? Are you worried about recession, or not so much?
Well, I'm always worried.
Yeah,
I mean,
yeah.
I'm doing this for over 60 years. I wouldn't be doing it if I wasn't worried. I mean, I don't know anybody in this business, if they don't keep one eye on the exits, they got a big problem.
Yeah.
I mean, when you walk into a crowded movie theater and they turn the lights out, what's the first thing you're supposed to do? Not sit down and get comfortable. The first thing you're supposed to do is look for the exits, to know what to do if something goes wrong. I think, like a lot of folks, you know, there's been a real push towards the Treasury, short-term Treasuries, you know, basically 5% money, risk-free, 3 months, 6 months Treasuries. It's been a great place to hide.
Right.
But the flip side of that is you got a lot of folks that got comfortable, as well they should, because a year ago you were getting zero on your money. So the Treasuries have been a good place to hide. But now you got a lot of folks that have gotten a little lazy. They like getting that 5% on the Treasuries with no risk. But the fact is the overall market, based on the things that we've talked about, market breadth improving, transports making new highs, these are all positive things. So I think what we're going to see is you're going to start to see some of this money that's been sitting on the sidelines, and there's plenty of it. And if it's not Treasuries, it's just hiding in money market funds.
I want to get into some of the stocks that you have here too. I mean, can we circle back on Meta? You still like it or not so much? I mean, it's
well, you know, Meta basically gave us all a near-death experience, and what Meta reminds us of
Near-death
this
experience.
business, this is the
Barbecue
only business in the world
kind
where
of
there's
flattening
not
out here at
near
this
death. And when Meta
23.6. Now that there's a gap down there, though, that's probably where we're going to go.
at $88.
Yep.
I mean,
see it here.
We'll probably see 38.2%.
I must say, I had my finger on the trigger. I mean, I was ready to blow it all out. I never sold a share. We did add
Leaving no gaps left
basically,
behind.
just kind of held on, and you know, we're still long. I mean, we've been long since 6 months
so
after the IPO. We're
How about
holding
names
on.
like Tesla and Netflix? I mean, people love to follow these names. Maybe a
Let me
quick
pit
thought there.
452.
I mean, it's not in my.
Oh, 452
in my
even?
box. I mean, there's nothing wrong with the names.
Right.
Other than Meta, you know, I'm.
Yeah, I
a
guess you're
little
looking for
old-fashioned, you know,
Right.
I tend
Okay,
to-
how about
rejection
the
on
AI boom?
one of these extensions.
AI boom that
Could be
we've
this first
seen,
one,
you know,
VWAP,
names
we'll
like
see.
Nvidia and all of these,
It's kinda looking strong, though, still.
hit new highs. Do you dabble in any of those, or you stay away from those?
Well, I think by osmosis you probably get in with Meta. You probably have exposure
Yeah,
to AI.
that's true.
But
Yeah.
no, the answer is
Not
I have
your
seen
thing.
so many what I call stock market fads over the last 60
Right,
years.
I know.
You know, they come and go. Some last a little longer than others. I'm not saying it's not where you want to be. It's just a world
Okay.
that I'm happy to stay away from.
And I have one more for you. Was
right.
there a time that you liked Johnson & Johnson?
Well, I own three big pharmaceutical stocks, but Johnson & Johnson is not one of them.
Oh, interesting.
And by the way, I wish I didn't own them because they act terrible. I mean, Bristol and Pfizer.
Okay.
I mean, I tell people when they talk about Pfizer, that's where money goes to die.
Right.
I've never seen a stock act so poor of all the names that we own. But
and then
Merck,
how about
even
AT&T
Merck.
and Verizon? I mean, yeah. Well, these were supposed to be the safety stocks. What happened?
Yeah, well, so much for that theory.
Would you buy in now?
No.
Okay.
No.
Okay, let's get to your picks. Canadian Pacific,
Well, yeah.
CVS Health, Chubb, you've always liked.
Right.
This Esloy.
Esaloy.
Yeah.
ESLOY. It's it's Essilor.
This guy's pretty
Okay,
sharp.
So you have 4 names here.
Right.
Go.
Of the 4, that actually Essilor is the most interesting because it's a French-Italian company. Luxottica is the eyeglass frame company. Essilor is the eyeglass lens company, and they
Wherever
own
you
in
store
the
employees
US,
from stores that are
retail
closing, are
stores,
told.
Lens Crafters, and in Europe, Grandview. So it's in my opinion.
Well, what do you expect from stores that are closing?
Of a silo type of company.
Yeah.
You're going to have a last day
completely
working there.
integrated, and I think they have something like 20% of market share in the whole eyewear industry. You know, it's a spectacular company.
Interesting.
It's a spectacular company, and I just don't know of any other company that has the footprint that that company has.
And
you
it's
can buy
almost
the
like a staple and a luxury put together.
exactly.
Yeah, it really is cool. How about Chubb?
And by the way, I must say they have ADRs that you can buy.
Yeah.
They don't trade.
And it's been creeping higher,
It's
too.
kind of, well, yeah.
It's doing well.
And the ADRs sort of track the ordinary.
Gold's so short with him.
Canadian Pacific is a very unique company. First of all, we've always owned rail.
Sorry, that's
Union
too
Pacific,
loud.
Norfolk and Southern.
You and Warren Buffett.
Well before Warren Buffett. Well before Warren
I know
Buffett.
he follows you, Ted.
He followed me, and then he bought Burlington Northern. But what's interesting about Canadian Pacific is they just bought, and I never thought they'd be able to do it, but they just bought KSU, Kansas City Southern.
Okay.
So most of the rails go east-west or west-east, but Canadian Pacific is the only rail that goes north-south and south-north. So, and KSU covers all the big
it's
Mexican
5.
ports. So
Maybe it's
basically,
handle.
they move traffic from
Okay.
deep into Mexico up into Canada. It's a very unique company, and the merger just was completed, so it's a little green. But I think longer term, it's going to be a great stock.
All right. Thank you, Ted, for all your picks and these that you brought to us today. Canadian Pacific, CVS, Chubb, and Esloy as well. Thank you.
So you like
Good
CBS?
to see you, Teddy. Thanks for being
always.
here. I love when you're in person. Ted Weisberg, Seaport Securities. Plenty more to come.
Char looks
here
nice,
on
actually.
Trading 360 in our 360 spotlight. We'll take a look at earnings from the airlines. So
I like
far this
CBS.
quarter, as we've seen some mixed results. And the disruptor, IBM.
Bad Radcant takes some of that market share back.
Earnings report. George Sillis will take us through those numbers and an example trade. Tesla in our 360 round, all about the earnings. We're joined by a bull and a bear. Let the
This is the last day open to the public. Their first employee's last day. Are you projecting the stores that are closing are not actually going to close? About the 451.93. You might still get that. It's looking like a handle here. Like to see maybe a little head and shoulders here before I go short. Just maybe building. Yeah, I like that. I like that for a handle. If we get a low of the day test, see if we bust through. Or if we're still... This is not a handle. No, I think it is. I think we had to hold VWAP for it to be a right shoulder on an inverse shoulder.
Treasuries to protect that money early in the year, and as that money has rolled out of those 1 month and 2 month T-bills, everybody's putting that cash into equity. So we've had a good 6-7 month run here.
I'll definitely close, but return.
Yeah. All right. So that being said,
why are
we've
you
gotten the gift of a market that is
I'm not understanding why you're correlating the store's closing with
your first name here, and that's
a new owner.
What's on your mind here, and why does it jump out at you?
happening the next day.
All right, Microsoft is a price hike story, really. They overcame the FTC lawsuit and appeal process last week or earlier this week with Activision Blizzard. They report next week. Consensus is for GAAP EPS of $2.55 on about $55.5 billion. This compares to $2.23 last year, and it would be good for about 10.6% sales growth. 23 of 26 sell-side analysts covering the stock have increased quarterly revenue guidance in the last 90 days. Trades at about 36 times earnings, so it's not cheap, forward-looking earnings. Past 12 months has generated operating cash flow of $83.4 billion, less capex of $26.9-ish billion, leaves free cash flow of $56 billion, which is gigantic. They've paid down $1.7 billion worth of debt. They've repurchased $25.3 billion worth of common stock, and they've paid out $19.4 billion in cash dividends. The balance sheet is robust. Current ratio 1.91. If you look around unearned revenues, which comprise about 43% of current liabilities, the current ratio right now stands at 3.4, which would be just outstanding. Cash position is over 104 billion. Short-term debt of 6.25 billion. Long-term debt of 41.9 billion. The price increases we're talking about are as for the cloud, for Excel, Word, Teams users, the prices impact E3, E5, Business Standard, and Business Premium clientele. Let's look at the chart. All right, readers can see that my $370 level has emerged as resistance. That was my price target going in. Relative strength has spiked. The daily MACD pushed into a bullish crossover. That's coming back a little bit today. We have a thick blue line on well, you can't see my chart. You're looking at Ben's chart. But the stock had an all-time high back in November, December of 2021, which it broke earlier this week, but it's not been able to hold. So right now we see the pivot is $370, my own price target. My new price target is $425, as long as they can get back to 370 and take it. I add down to the 50-day SMA, which is 340, and I panic if it breaks the lower trend line, which is $310 right now. I am long this name.
Okay. All right. Ben, Microsoft.
Sarge made a bullish case for it in terms of the fundamentals. Nicole, I don't see any indication that we're seeing anything other than that in terms of the technicals. Let's begin with the more intermediate time frame. The rally, we've seen a pretty well-defined trend. We're going all the way back to the end of March when we were trading down around 260, 270. You can see the earnings in April, that catalyst to the upside, and since we've continued that trajectory, I identified a couple of areas of consolidation that have formed along the way up on this hourly candle chart here, and you can see that we have established value at higher and higher levels with limited retracement. The real question, I think, at this point comes into play is, after a vertical move here now, do we start to establish something in terms of a new area of consolidation at this higher level that would feed into
making me do arithmetic.
this bullish narrative that we're looking at here and that the SAR describes so well in terms of the fundamentals. Taking a look and adding a little bit more time onto this chart. These are now daily candles. Going back to the beginning of November of last year, you can see again these areas of consolidation with limited retracement. That's what you want to see. You don't want to take out any of the key areas that were established on the way up. If we start to currently balance and form a new area of consolidation in this at this level here right now, then, well, we're going to be referencing the 235 area. Currently now trying to break out here, though, until we establish a new area of value at a higher level. We're looking at
I'm still not following. I'm sorry.
Very bullish narrative here across the board.
A little slow this morning.
Relative to the 50, the 200-day moving average, RSI is lagging a little bit in terms of what I'd like to see as far as energy strength from the relative strength indicator here. It's limited in terms of participation, a bit of a bearish divergence there, but holding above the closely watched moving averages. And again, off the lows that we saw last fall around 213. This is a stock that's paid off the long-term bulls.
Yeah, without a doubt. I mean, when you look at the long-term chart, it's unbelievable. When it's at 366 and Sarge says his price target is 425, I mean, in the end, you definitely see some upside potential for the bulls, at least. Let's get to your next name, Sarge, and their Salesforce there. You know, while Microsoft's up about 45% this year, Salesforce is up almost 75%. What are your thoughts?
Yeah, no, I understand the part of them keeping stores open.
CEO Mark Benioff, as everyone else, has been under pressure
303, as Zumi says. I think that's right number, 235. BY 65, baby.
August 23rd. Consensus is
we were talking about the stores that are closing, though.
That compares to
we're talking about people.
Last year, and it would be good
people are told at the end of, let's see, what did he say? Told 31st is their last day when stores are closing.
For this quarter. It trades at 30 times forward-looking earnings, which is
well, I don't know what's that have to do with the stores are staying open.
So I think it's relatively cheap to the group it's in and to the AI group type of business that it's in right now. Last 12 months generated operating cash flow of $7.9 billion, less capex of only $860 million, leaves free cash flow of over $7 billion. They paid down more than $1.4 billion worth of debt, and they repurchased more than $6 billion worth of common stock. Go to the balance sheet. Current ratio of just 1.02, but that is again because of under
the FAI is ripping still.
Of current liabilities.
Bounce on VWAP.
One item, the ratio would go to 3.5, which is excellent. Cash position of 13.97 billion. Long-term debt of just 9.4
I can test that low again.
The price increases.
Got to handle a little head and shoulders here now.
Integrated into the firm's sales and service clouds are now available at $50 per user per month to all clients. If we go to the chart, viewers will see a January through May upward sloping price channel that has morphed into a June into July basing period of consolidation with a pivot of 225. Over the past week or so, the stock has tried to take and hold that level. On Tuesday, CRM tested the pivot as support. On Wednesday, the news that I just mentioned forced the stock to outperform, but it's come back in a little bit today. It's holding around 230. My target price for Salesforce is 259. As I mentioned, my pivot is 225. I add down to the 21-day EMA, which is around 219. I panic at the break of the 50-day SMA, which is $210. And once again, I am long this stock.
All right. So that being said, he's long this one. Talks about these price target hikes that he's been seeing. Ben, your thoughts?
Sarge is targeting 259. I noticed 260, the next area to keep an eye on. But let's just start off with the trend environment to the upside on multiple time frames, and then we'll get into why that 260 area is significant and the reversal that we saw in the longer term. But first and foremost, three areas of consolidation you can see forming at higher and higher levels. Currently balancing around 231 after a spike up to 238. The bulls do
bounce
not
their own SPY.
Back down below 220. They're looking for a breakout here in an area of consolidation.
Building some liquidity on that right shoulder, maybe.
We're looking at over the last couple weeks. This chart actually adds a little bit more time on, but very similar depiction, right? We're going back to the middle of March. You can see 3 areas of consolidation that have formed, again, at higher and higher levels. Still looking for that trend to continue, and along the lines of what the Sarge was just laying
break
out
above.
in terms of the fundamentals, I can see why
Above that
a lot
shoulder?
of people are holding on to this one. Taking a look at the longer term, here you can see this was in a downtrend, right? All the way into the lows that we
Tesla
saw
VWAP would be
into the end of last year, beginning of this year, but quite the reversal. Once we got back through 150, again, this area of consolidation that formed prior to balancing around 133 on the lows. Look at this, off to the races here. 210 we took out recently. That's why we're targeting 260 here. That's a balance that formed into the end of 2021, beginning of 2022. I can see the bullish narrative here playing out on the technicals and
XXII up
fundamentals as
8%.
Okay, thank you for that, Ben. All right, so look, he's somewhat agreeing with you, Sarge. He's not saying the complete opposite in that he doesn't see it. All right, so he seems to be on your same page. What about Tesla? You know, came out with its latest numbers, a little mixed. I mean,
Thing has just gotten
talking about
dunked on.
You can't always control the short term, but the long-term story is in place. Your thoughts?
About
Right,
bottoming.
Tesla's more of a price cut story, where the other two are price hike stories. I was long Tesla. I rode this name for a couple of months. I got out of it last night in the after-hours session after they reported. Now, the earnings were all right. Adjusted EPS of 91 cents per share on revenue of 24.9. They were both beats.
Oh, sorry.
Revenue was up 47%, but the cost of revenue was up 60%, as gross margins dropped from 25% down to 18.2%. Operating expenses were up 21%, as operating margin dropped from 14.6% to 9.6%. Net income still grew 19.6%, thanks to a $328 million that I noticed on the information they labeled as other income. X this other income, whatever the heck it is, net income grew just 5.1%. So not so hot. The stock closed Wednesday night at 103 times forward-looking earnings, which is very expensive. As for cash flows, disappointing. Operating cash flows were a little over $3 billion. CapEx was a little over $2 billion, leaving free cash flow of more than $1 billion. You would think, hey, that's great, $1 billion of free cash flow. But we were looking for $2.5 billion. All right, so they missed by a mile on that line. As far as valuation, I do get it. Musk is spending money to develop batteries and new products, to sell electricity, to keep prices low in order to force legacy automakers to sell their electric vehicles at a loss. He's competing. That's what he's doing. This is intentional. Musk also guided towards weaker Q3 production as they reconfigure some of their factories. The balance sheet is gold, okay? Tesla has a great balance sheet. They've sacrificed performance, and this balance sheet has allowed them to do it. All right, current ratio of 1.59 for a manufacturer, that's fantastic.
AP down 1.5.
Ratio of 1.07 for a manufacturer, that's almost unheard of. Cash position of 23.07 billion. Total debt of just 2.3 billion. All right, if you go to the chart, viewers can see that Tesla broke out of a basing period of consolidation with a 218 pivot back in early June. The stock has then had a target of $262, which was quickly overrun. Am I done with this name? No. Am I going to short Tesla? No, because I've learned my lesson several times over on that one.
So he calls it Tesla.
When relative strength moves below 70, as it might be doing right now while I'm not looking, and when the 12-day and 26 EMAs don't make the MACD, the daily MACD, that is, look a little ridiculous. Basically, I want to buy back these shares when they retrace this year-to-date move. My plan is to start getting back in at the 50-day SMA, which is 223, and scale it in towards a 50 or 61.8% retracement of the entire move.
All right, so you need a little retracement in order to get back in. You do want to get back in, though. And by the way, you should watch the end of the show. I know, Sarge, I know you always love this show, and I really appreciate your support. But at the end of the show today, we have Hatem Diab and also Gordon Johnson for a bull-bear Tesla debate. I have to rein them both in, I think. Ben, your thoughts on Tesla?
In a well-defined bull trend here right now, no rejection of that right now. Holding above the 50, holding above the 200, taking a look first and foremost at the move up since the end of April. You can see well-defined areas of value forming at higher and higher levels, currently bouncing around 284, testing the lower extreme thereof, but not rejecting that lower or that upper level as of yet. You can see the run away from the 50, away from the 200-day moving average, and RSI is somewhat limited here in terms of participation to the upside, and I think that's why that bearish divergence, in addition to the news last night and some of the sellers like Sarge, we're seeing price come off here today.
It's so great to see you both. Sarge, glad to have you back today. Thank you both for the big three. Ben Lichtenstein there on the charts.
Lichtenstein.
Stephen Guilfoyle, Sarge 986 LLC. Thank you. Coming up next, time to spotlight those airline earnings. American Airlines falling after its report today. United Airlines slightly higher in reaction to its report. We'll get all the details. Which ones are best positioned going forward? Next on Trading 360.
Yeah, market's just chopping around here around SPY. I don't like it. Or around the VWAP, rather. Aloha, Maui Sam. How much money did Tesla lose? Make less? I'm not sure. Do they not say? Maui, I think the low. So there's a gap fill down here at 34.40. I think we'll probably fill that. And that also lines up with a 38.2% retracement, which could be our handle on another cup and handle that's being formed. So first target for me would be that level. And a 34.08. Somewhere in there, 33, 34 range. And if that doesn't hold, then 32.62 would be as far down as I'd want to see it go. And probably come by tomorrow, I'd say.
there's been certainly strong summer travel demand. The question is whether or not the demand is likely to continue for the holiday season, because that's not that far away. We've certainly seen the cruise ships talking about future bookings and good news there. What do you think about going forward? Do you expect that these airlines will all thrive? Which ones seem to be best positioned, not only just to book the flights, but also the balance sheets? Which ones seem real steady, the winners to you in your mind?
Well, again, I'm not a financial. I'm a digital analyst. I'm not a financial analyst, so I don't get that deep into the books. I know there's some issues with debt and other things, but I don't know that in detail. I mean, right now, I'd still rather be a cruise line than an airline. That is still one of the strongest stories in travel, and also we see some of the best results, the best trends, anyways, for low-cost options like Frontier Airlines or in cruises. Some of the lower cost options there are the ones who are doing the best.
Are you a fan of JetBlue?
Sorry?
Taking over when we talk about JetBlue and the merger that's underway there?
Yeah, let's see, JetBlue. If I look back at my notes, I don't know. They haven't necessarily been doing that great. Spirit, tracked as a separate brand, has been doing better in terms of online demand. So I looked for the quarter. JetBlue is down 6.9%, so nearly 7%. Spirit is up 4.9%. So maybe that's a sign.
GFAI is still ripping, 43%,
Spirit to come
44%.
And help the overall picture look better.
All right, let's leave it right there. David,
Also rallying up.
Thank you.
We're going to do an inverse head and shoulders here with break of VWAP.
Disruptors, George Sillis is standing by. He's taking a look. IBM after its earnings. He'll break down all
Still
the
could be in a handle though.
And he will have an example trade on IBM as well. Next on Trading 360.
Beyond is down 7. Be a good little re-entry on Beyond. Up's down 5.4. You can day trade with the phone. Whatever you get comfortable and used to. Like scalp trading, like real quick. You're gonna be a little limited on how quick you can get in and out. If you get a good app that you like and you're fast with. You're low there on barbecue. 35 cents. 34.70, a little flush there on barbecue. Getting closer to that gap fill. $34.52, starting to fill that gap. Updating the Theta farm. Opened up another cash card put. Spy's coming down here. Spy's kind of chopping around. I don't really like it. I'm at 7%. Air 34.25. Not quite filled. Close. I'm showing 34.14. There could be a little margin for error in there, but I think it'll probably go a little further. At the least. We are indeed looking at charts. Charts of stuff. If you're trying to time the bottom, you could put an order for that 34.14. We don't know if that's going to be the bottom yet, though. Today's trend is pretty steep. But you are getting a little bounce there. %. That's pretty good. Those ones you got in this morning. Not necessarily waiting for something to happen. If that 34.08 breaks, thinking probably 32.62. But we do have tomorrow also, and they like to dump it on Fridays. However, there could be news. I feel like at any moment, so that is the risk. Good news or bad news. 53% on GFAI. Wow. Still ripping. I mean, yeah, pizza party tomorrow for sure. Friday pizza. What's up, WM? 34.35 is a fill for you? I don't think it's... I mean, yeah, I guess some brokers might. Oh, I guess if I go down to the minute. That's true. I usually don't go much shorter than... much shorter than 5 minutes. Or gap fills. Yeah, 34.14. Go down to the second, you'll probably find it a little different. So barbecue, I already sold it, man. I'm gonna buy soon, Trace. Sorry. Zumi, I'm fine with a bigger retracement. Bigger retracement could mean a bigger move to the upside. More liquidity is built. Stronger move. Also, of course, I'll be able to get more if it goes down more. Anybody else that's trading it. We could bounce from here though today and cruise back up to VWAP. Still keep doing the move tomorrow and even next week. Doesn't have to end this week. Dish is up 1.7. Trup's down 5.5. XXII still up 13. GME's down 1%. 8% on tops. Cosmo Kramer down 20% today. They offer shares or something? Direct offering prices. I have to think Carvana's going to offer shares at some point around here.
On the bad news, both had a little bit.
Yeah.
Netflix had
revenue.
Revenue. Tesla had margins. The market seized on that. All the others went down with it. So my theory that this
12
is becoming
o'clock.
a new
Happy
sector,
noon to
right?
you.
These 7 or 8 stocks are becoming their own sector. And so, and by the way,
We're at
they're
25
all
likes
down.
on the day. Well done.
Even Microsoft, that had
Appreciate
unbelievable
it.
news and pre-market was hanging in there, is now down 5%. So kind of interesting. Some of it a rotation? Maybe a little bit. Look at the Dow, up 0.8. That's pretty solid. So some of it might be some rotating, but this is perfectly healthy for these stocks to do that on their earnings.
Yeah, after the massive rallies that we've seen in them, it's not surprising.
It's not that scary.
I know, exactly. And you've got the Dow up higher on the back of some earnings and some movement up there. But Netflix, one of those stocks, down about that one standard deviation that we talked about yesterday. Just over $40 to the downside. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break down this story, because as Kevin and I kind of alluded to, Jenny, this is almost like a relief consolidation / sell-off after the massive rally that we've seen in there.
Yeah, and I think this will be very interesting to see when we get the next wave of tech names that reports next week, what these names look like, because I have to say that
Stock climbing up a little bit.
Netflix's report, I know they missed on revenue, but it was still strong. So I think that we're priced too much to perfection, that these results are not able to please what has been such a high bar that's raised for this company. I mean, how can Netflix basically add more than double the estimated subscribers, being its second best quarter since COVID as far as its new subscribers, and still miss on revenue? Some of these metrics to me just don't make any sense. Adjusted earnings did come in well above expectations, also rose on a year-over-year basis at $3.29 per share. Their paid net ads came in around 5.9 million. This was well above the street's consensus, driven by their paid share out rollout to more than 100 countries, which they do plan to roll out to the remaining countries this week, they said. The company said they ended the quarter with 238 million global paid subscribers. That was up 8% year over year. And they highlighted the steady progress they've made this year, but said they still have work to do to re-accelerate their growth. And they're focused on some of these much-watched shows and movies, improving monetization, and investing in to improve their services for their members. Now, going forward, the company expects their third quarter earnings to come at $3.52 per share, also well ahead of estimates on third quarter revenue of approximately $8.52 billion.
Chewy's down 6.
Slightly softer than what they had previously guided for, but they said they expect some of this growth to accelerate from their recent paid launch, and they also expect some of these initiatives in nearly all the remaining countries to see this steady growth as a result of their ad-supported plan. They did mention the ongoing strike, which I think is a concern right now for not only Netflix, but for Warner Brothers, Paramount, some of these movie theater chains. We saw Cinemark yesterday downgraded as a result of the fact that we could see production delays that affect some of these theaters, as well as the studios that are producing these movies, and then Netflix, which of course is now considered basically a studio in itself. So I do think that right now we're seeing things evolve, and Netflix is not going to be able to be the same growth behemoth it was several years
bounce
ago.
there on that.
Netflix has become a more mature company, but I also think when you
Close
stock
to
goes
a
up
full gap
so
fill.
significantly over the last 12 months,
Wonder if
still
that's within the
50%
margin of error.
year-to-date, that right now expectations are just too high for some of these names.
I'll give it
Tesla
time.
included.
Jenny, in a normal
Looks like it'll
market, with
probably make its way
normal
back to
price
VWAP
action,
36,
these
46.
numbers, remember, so many of these streaming companies get judged on the subscriber numbers. This would have been a blowout number for Tesla. However, the stock already kind of priced, or Netflix, sorry, did I say
Still
Tesla?
no shares?
Sorry, Netflix. So, but these numbers,
It's
because of where the stock has run, it's really overreacting. But here's, a lot of our concerns with Netflix over the past has been free cash flow, where their free cash flow just jumped from $3.5 to $5 billion. So this is a company, the clear winner in streaming. And when streaming is starting to struggle and people are struggling to be profitable, this company keeps getting better, Jen. I mean, this is something that I think this is a knee-jerk reaction sell-off, but boy, Jen, this is a really good earnings report.
To me, this is the staple of the streamers, right? I mean, I'm not really sure many people that would choose another streamer over Netflix. It seems like the one that everyone has. And then the add-ons are like your Paramounts, your HBO Max, your Hulu, etc. So this has become, I'd say, basically very important, very central to so many households. And you like to see that. You like to see a company that is more stable. I think we need some of these tech names to stabilize here. And Kevin, like you said, still a really, really strong earnings report. We've seen shares surge on what has been a less exciting report from Netflix. This is easily their weakest earnings reaction, at least so far this year. But I think just given some of these stocks run-ups into these earnings, I can't wait to see other names like Microsoft, Nvidia, Amazon as they report, because these names have just been on a tear. I think we need to see tech cool down a little bit, honestly.
As Kevin and I mentioned before, any bad little segment in any of these releases with the stocks moving the way that they have,
Netflix can't rally until Jenny Horn gets back on Netflix. Let's face it.
One day, I'm trying to limit my expenses, Kevin, and we're working on cutting back Jenny Horn's frivolous expenses.
Yeah. Okay, I got you on that one.
Good luck with that.
Yeah, all right. Thanks to Jenny Horn, markets correspondent, here breaking down the Netflix story. But now let's bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nathan, you know, we've talked about how equity markets have rallied, kind of shunned the potential for a recession, soft landing in sight. You know, markets getting frothy here a little bit, but what was your reaction to some of these earnings reports where, you know, you see a stock up 50, 60, 100% in, you know, in 6-7 months? It's not surprising to see some pullback, and maybe that's what we need for the next leg up.
Yeah, I think you guys are on it. I mean, if you look at Netflix was up 50% since the beginning of May. So we're talking about a couple months here. But it started last week, I think, with, you know, Delta Airlines. Great numbers, great guidance. Stock sells off as a reaction. Then you come into this week. Semiconductors closed at a new 52-week high on Tuesday. We get ASML yesterday. Beat on the top line, beat on the bottom line. Guidance was above. The stock's down $65 in 2 days. So they're still selling into it today. And then you get the likes of, look at it, DR Horton today. They gapped up, huge bearish engulfing candle today. So I think that's just naturally what's going on. It's a sell on the news type of event, or at least that's the theme that's kind of developing. We still are early, and we have a lot of those earnings announcements next week out of tech. But the S&P was at a 75 RSI yesterday, and it's only been that high basically 3 times over the past 2 years. And if you pull up the charts and you can see, we go into some kind of a consolidation move. The last time this happened, we were at 75 in the mid-June, and we got about a 6-day, you know, couple percent pullback there. But I think Kevin's right. It's just a natural, healthy consolidation. You mentioned rotation as well, Tom. If you look at the best performing sectors out here recently, it's those value plays. It's those sectors that are not loved as much, those with the sub-market multiples, those like healthcare, financials, staples. So that's where the money is going. Where can I get some incremental alpha? If the growth sector looks like it's a heads I lose, tails I lose going into earnings, some of that money's flowing over into the perceived value trade.
Yeah, Kevin, to kind of expand on that a little bit, Taiwan Semi came out with earnings this morning, and they guided Q3 a lot lower than the street expected. You're seeing all the chip stocks get hit pretty hard here today.
But, and here's the thing, here's what's, for our viewers, if you're looking at your screen and looking at the indices, think about, here's what screams to me that they're rotating. You've got the NASDAQ down about 1.2%, but you've got the Dow up about 0.8%, and the S&P is basically down only small, right? So when I see something like that, let's take the Russell out. It's kind of its own small cap universe. But when I see one up, one down, and the S&P relatively close to unchanged, that tells me that they're rotating.
Yeah, and I mean, I think, Nathan, we've been covering like the theme between like the dollar and yields and its effect on the equity markets pretty robustly here on the network. But if you look at like the dollar rallying today, second day in a row, yields spiking to the upside here, but it's having little negative effect on the overall market. So it's like the market's in this FOMO type of position where, hey, even though some of the asset classes are signaling that equities should pull back because you know, equities rallied when it was going the opposite way, we're not seeing that yet, and that's a concern for me also. Like, if the equity market catches up and says, oh, yields are higher, dollars higher, we haven't done really anything to the downside.
Yeah, you're right. I mean, you know, the yields are, you know, 11 basis points on the 10-year here. Normally you have that inverse relationship with risk assets. And you know, I'd say this, though, you know, on the 10-year also, it kind of pulled back from that 4% level. So technically, it's still back within that, you know, 3.6 to 3.9-ish range where it traded, you know, for several months there. So technically, it's not
Here's
like
your
bounce
back to view up on
where,
barbecue.
You know, it's setting a new multi-month high or anything like that. That was the case when we were getting above
His voice is off. That's annoying.
In the bullish thesis, that is that the economy, it is hanging in there. The Fed is one and done. We are going to, you know, miss a recession. Yes, we are fully valued, but the momentum and the technicals are still pointing higher, even though, yeah, we might get somewhat of a 2 to 4% pullback here if this sell on the news type of event continues. And I'll just say for our viewers, if you're out there and you have a lot of these names and you're concerned you might get a sell on the news post earnings, you could sell an out of the money call, or you could collar it up. I mean, there's ways that you can position yourself with options if you're concerned heading into the earnings reports. We get a ton of them next week.
Without taking a tax event is what, right? And, you know, Nathan made a good point. If you look at a one-year chart, one-year yield, it's gone back into that range of 3.7 to 3.85, and jumped out of it for a couple days, but now it's
Spies climbing up here too.
Where it's been consolidated for a while.
Yeah, just about almost 2 weeks ago, it was above 4%. Nearly 4.1%. But Nathan, when you look at, you know, Tesla's another one, still up 120% this year, pulling back about 6.5%. We just had a debate on Nicole Petaliti's
See if
show.
there's 50% retracement.
Between
See if we're in a
Gordon
big handle here.
Guru Kawasaki, a debate on Tesla. Go to our website or our Twitter handle to watch it. It's pretty interesting. But that stock is one of those names that, you know, you either love it or you hate it, right? And that debate will continue as far as valuations. But you look at that pullback, is that another example here that, hey, it might give you an area to get in, but then it might signal that, you know, maybe some of these stocks have gone too far too fast?
Yeah, up 90% since the beginning of May on Tesla. I mean, that is, you know, that's a lot to behold there. And then, yeah, you look at the margins. That's probably the biggest story there, coming at 18.2% versus 18.8% estimate, down 650 basis points year over year. So for Tesla, I think
Jenny Horn confirmed unsubscribed.
I guess if you're a bear, you would be looking at competition and margins, and
how do you know?
That would be kind of your one of your pillars that you would go into, but. You know, there's also ways when you get these types of sell-offs here that if you're looking to get in these types of names that you've missed the boat on, you know, another strategy you could use is selling those out of the money puts. So that's just another way that you could, at least if you miss the assignment on the pullback, at least you can get compensated while you're waiting if you're not quite sure if today is the day to get into a stock like a Tesla, because it is down 19 bucks.
Yeah, this is definitely going to be one to watch, and I think that debate. I mean,
looks like this handle might be
targets. I
failing.
think Gordon Johnson, that was on the network, had a price target of like $45 or $25.
No, he said 25.
25, yeah. And then
okay,
then you got
2,500?
Yeah,
no, $25. Oh, okay.
And Dan Ives, who's on our shows across.
I've got a
350.
just intraday
so,
cup here.
But then there's 150 price targets, so all over the place. That might
look for a high of the day retest.
Some more research on
If
that
this
one.
fails.
But let's take a quick break here, guys. When we come back, we're going to talk another one of the Elite 8 stocks that's had a nice, great year, and that's Amazon. The mega cap tech stock has rallied about 60% so far this year and continues to get positive commentary from analysts. Coming right back.
Well, there you see it. Just wicked above 50%. If it is still a handle. Oh, unsubscribe to Netflix. Yeah, she said she's mooching on her brothers or something. Falling knife for penny retest Aviation barbecue. Yeah, it's still in a downtrend. But yeah, there's still a little gap down there. I'm just gonna go down and then up. This could take days. There's a retest on VWAP or Les Spy. I'm just gonna put a stop on this short. Been pretty choppy. I'm not sure if we're gonna follow through past VWAP or not yet. Nirvana 14% down. Starting to fill that gap, maybe? Not quite yet. Eyes breaking VWAP there. For low of the day. Retest. Let's inverse cup. Potentially.
getting up in that area, and it's, you know, I'm not a big technician, but I will say that anytime you see a resistance level like that that goes back 5 months, you got to kind of at least consider it. So we're getting up in that area, so that's a concern. We also have some concerns when it comes
sold
to
Tesla calls and donated to the
consumer
channel.
trends. We know that
This is the way.
credit card debt is up, savings are down. Even new data is starting to say that second mortgages are going up. Inflation's always a problem, and income's really kind of stagnant.
Yeah, I
So
held
think
my
that
shares.
we would
I have
want
long-term shares. I'm gonna slowly
to go
scale out
a
of.
certain way is going the other way when it comes to the consumer.
I think
But as
it
you
might
guys
still have a
talked about,
push,
this is the higher end consumer.
a little
And
further
we've
push up to
seen
the
in our
314
data
level.
a bit of a dichotomy where you've either got, you're either doing well enough to afford things and you're not really, you're kind of shaking
Oh, we'll
off
see.
this mini recession, or you're shaking off inflation concerns, or you're really being impacted by it. And I think American Express customers are generally in that first category, so they're going to be.
You had 100 shares of Tesla you sold,
on that.
or you held through?
You know, where we're at right now with American Express is kind of neutral. I think if the stock were much lower, if it were, you know, 10 or 15% lower, I'd probably lean bullish here. But because it's run so much and it looks pretty strong, I think that expectations are high, and I'm guessing that things are going to come in line or maybe slightly disappoint, but we're not taking a huge position on AXP going into this earnings call.
Landon, what differentiates American Express from, say, Visa and MasterCard is they hold balances, right? So they do better when interest rates go up. That's one of their income silos. Visa and MasterCard really don't do that. They make money off the swipes and the fees like American Express does. But I read a really interesting article that says where American Express is most aggressive in getting new customers, and their new cardholders up 3.4 million versus 3 million last year. They go after millennials and Gen Zers, and they go hard after them because the data tells them.
I see.
Once you get one card, you usually stay with it for most of your. So they're getting these people young, these young millennials and Gen Zers, and they're getting them in the house. And boy, that really bodes for a good future for a company like this, Landon.
It is. It's a smart strategy, and you're right. I think once you have a card, you tend to stick with it. You get used to the website. You get used to how it works. And there's some advantages to American Express. You know, they charge merchants a little higher, which means they're able to give their users a little bit higher rewards. They're just basically taking it from the business and giving it to the user. But as a user, why not, right? And also their chargeback or their dispute policy is very, very favorable to the consumer. So versus the others that goes through a little bit more of a process. So I think it's probably the best product of the three when it comes to the consumer side, and the worst for the merchant. But you got to take it as a merchant. But to that point, you know, we just talked about how maybe there's a little bit of resilience among their consumer base.
100 Teslas is a lot of Tesla.
A little bit better off. But if they're going after the younger clients and trying to build in that lifetime value,
thanks, Tasty. Appreciate the support, man.
Then it's also going to work both ways, where this type of economy is going to be a little bit more impactful for that type of user. So if they're going to weight their user base a little bit younger than they have been, a little bit lower income, then things like this are going to try on them a little bit more than they would had they not done that. Still, it's a smart move long term, but just be aware this removes some of their resiliency to the effects of a bad economy.
And when you look at that comparison between other credit card companies and happiness levels like that, Landon, because it's the high-end consumer, do we get any decent happiness numbers, maybe where they outperform a little bit? Discover Financial, that stock's getting hammered today, but they had a little outlier in some of their earnings. This might be the quarter where guidance kind of dictates what's going on. Are they seeing any softening from that higher-end consumer, right?
Right, exactly. And you talked about Discover. We were negative 43 on the earnings score for them. Now, that's not why they went down today, right? They're down 16%. It's not because of their business is
Great Carvana call out?
Regulatory concerns.
Did I call it out?
So I think that
talking about your own call out.
Are kind of getting lucky today, hitting it as big as they would have, not as big as they are. But just to give you a little perspective, so Discover was a negative 43. Visa next week.
The option period's got to be crazy, right?
Express is negative 16.
That's true. It's Thursday. We could be doing some weeklies.
See how that shakes out. But American Express kind of just in that neutral zone.
214%.
leaning a little bit bearish.
Dude.
A lot of it has to do with just
Nice.
how well the stock has run. As you know, generally we use the stock market as expectation guidance, and if the stock's really high, expectations are high. It's kind of why one of the reasons we were so confident into Netflix yesterday, because the stock had just run so much that you've got to just kill it in order to hold the stock price. So that's why we're just slightly leaning bearish, but probably not enough to put on.
So holding your curve on it.
All right, great stuff. Great.
100 calls.
Always, Landon,
Oh, that's
appreciate
right. I
it.
remember you opened those up.
All right, this is Landon Swan, co-founder at Likefolio. Slightly bearish
could-
here on American Express going into this report.
Could sell some
It goes
sell
back
some other
to
calls
our
against that.
adage that we've been talking about for the
Just have to
last
be
week or two.
higher
Even
strike.
If they hit every number, you're probably going to have to look at one or two things that might kind of dictate where the stock goes.
Exactly right. So, yes. That being said, like I said, the two articles that I read today about American Express both made me feel bullish on the name. That doesn't mean it's going up, right? We're in an environment now where everything having earnings could go up. But, so I did one of the strategy I do a lot on this show, where I sold the put vertical, the 170, 165 put vertical in this week, one day, and then I bought the 180 1 week call calendar, Tom. So here's the thing. If you're bearish, you could do the opposite. You could flip it and do the downside put calendar and the upside call vertical. But I did, and if it's unchanged, you do okay in this. You don't get hurt in any unchanged. You're doing it for basically between even and a nickel. So flat in terms of the overall debit. I've got it a nickel, I think, on the board, but it's trading right around even right now. So buying the 180 call calendar, selling the 170, 165 put vertical, Tom. So like I said, if you're bearish, then you could flip it and do the put calendar, call vertical.
Yeah, I like that, giving the opposite view of this. But here's the example trade Kevin's laying out for you, where going out to that July 28th weekly series, so 8 days till expiration, buying the 180 call, selling the same strike in the July 21st monthly series that expires at tomorrow's close. There's your call calendar, 1 week wide. That's help financed by selling the July 21st that expire in just 1 day. Sell the 170 put, buy the 165 put, so selling a $5 wide short put vertical, paying roughly about, as Kevin mentioned, even to a nickel on that one. But that does, because you have that short $5 wide put vertical, your risk on this below 165 is $500. But you can see here from the risk profile, break even just below 170 on this one. So even if the stock kind of sits here, you can still be profitable on this type of trade. The idea is, Kevin put it about where that one standard deviation move is to the upside, and that's where the apex of your profitability is, right at that 180 strike where you bought the call calendar that expires in 8 days. You do have some assignment risk on both the short 170 put and the short 180 call into expiration tomorrow, so keep that in mind. It is a four-legged spread. You have some transaction costs, no commissions on that, but a good look at a strategy where you take a call calendar, you help finance it by the put, but you got to remember a short put vertical is neutral to bullish. That call calendar, depending on where you put the strike, in this case is bullish also. So you got to keep that in mind going into that. But good look at an example. Two strategies combined to create that positioning there. All right, we're going to take a quick break. When we come back, we're going to take a look at Target. The retailer continues to underperform the overall market, down about 10% so far this year, with the S&P 500 up over 18%. Fast Market's coming right back.
I'm closing out of my short here. Didn't make it all the way down to the low of the day. So we'll see. Laser's down 6. A lot of earnings still in our short-term future. GME's down 1.5. American Airlines is down 6. They had earnings, I think. Yeah. Excuse me. Barbecue down 8%, 34.90. Still a little bit of that gap left to fill. Liechtenstein.
8 straight days where it hasn't fallen 1%. That's the longest level that we've seen over the last couple of years, so keep that in mind. But yields spiking here a little bit today, not having a huge negative effect, but definitely probably putting some pressure, especially on the tech names, right?
Yeah, and it has been one of the trends that we've seen. It seems to be playing out here today again as well. I notice on the future side of things, you've got the bonds, you've got the 10-year retreating away from a recent failed test this week at the 50-day moving average. So they're coming off that level, and that's got yields on the move higher here. Taking a look at, well, you've got the 5-year all the way to the 30. I noticed the 30 hanging out around 3.9, the 10-year at 3.86, and that 5-year hanging out at 4.12. Yeah, look, a big percentage-wise move up, but again, you know, it seems like as long as we remain within this range, for the most part, investors, traders have kind of accepted this higher for longer rate environment narrative, and the focus here really seems to be on the earnings. Again, kind of tying back to those two big tech names, sort of set the tone for today, Tom.
Yeah, dollar higher also putting a little bit of pressure on stocks. All right, thanks to Ben Liechtenstein, host of the Future Show here, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking Target. I guess, you know, when I looked at this name, we're talking basically the consumer today, American Express we talked about Amazon. What is wrong with Target, George? This is one of the most unloved, you know, big names out there in this market, down nearly 10% this year. It's been trading in a range after falling at post-earnings last quarter. You know, what are they doing wrong, George?
Well, let's talk about that range first. I mean, it's at the top of the range in the last quarter between 135 and 127 on the downside and the upside. I think if you look at Target, there's been really a deceleration in same-store sales comparisons, but also if you look at last quarter, when they reported, they actually denoted a decline year over year in digital sales. So I think there may be an element of competition that Target is really facing. I think at the end of the day, if you look at Q1, numbers, they actually were down year over year by about 6%, and revenues were relatively flat, just barely higher, about 0.6%. I think it comes down to the end of the holiday season, which was Q4. In Q1, typically, I think people are more inclined for digital sales. Maybe they're moving over to some areas of consumption that are found on places like Amazon or even a Walmart. But Target really denoted some of the challenges. Inventory challenges were denoted last quarter. Same-store sales were effectively just slightly higher. Traffic was very low, about 1% year over year. And sales, like I said, were just barely positive at 0.6%. And they also noted some challenges because of theft. There's been a lot of criminal enterprise, organized theft, if you will, or crime rings that have really attacked companies like Target. Home Depot has really talked about this as well. But at the end of the day, I think one of the areas also that can be pinpointed in terms of some of the challenges Target faces, I think, is home furnishings and decor. They actually have quite a bit of a large private label home furnishings and decor elements to their sales, which is about 23% of their sales. And I think that's an area that they've actually faced challenges versus things like food or household items, and particularly also cosmetics, which we know have been in high demand irrespective of the economy.
George, you're right. The drop-off in digital has been substantial for them. Also discretionary products. But George, let's talk about margins, because margins seems to be what's really holding them back. They dropped a while ago when they got stuck with a lot of discretionary inventory. They're trying to get them back up towards 6% or slightly higher, and they seem to be struggling getting there, George. What's the problem here? Because, frankly, a lot of Walmart, other companies had the same problems. They're all climbing out. They're leaving Target behind, George. Are they having trouble finding their niche between all these retailers?
Yeah, well, here's the thing. If you look at Target's breakdown from food and household goods, if you look at beauty and household essentials, apparel and accessories, I think that's an area that they've actually faced challenges, and particularly also their furnishings and decor and hardlines business. Altogether, it's a very balanced business, but that, again, may be one of the challenges Target has faced. They don't have the concentration in things like food or household essentials like Walmart does, or even Costco, as a percent of total revenues. So I think that's one of the reasons why it's underperformed those other larger respective peers, because they do offer sort of a wider variety, sort of one-size-fits-all shopping experience. And right now, the discretionary components have been a challenge for Target. They have to, of course, show some merchandise discounting, if you will, and maybe there was an inventory mismatch, particularly when it comes down to apparel, accessories, and, of course, home furnishings and decor. So I think those four categories have really hurt Target in the past year. But you also have to consider, when you look at the same-store sales growth, which is positive but relatively low compared to, of course, some of the mid-single or even high, single-digit rates we saw during the pandemic, the company's actually shown some EBITDA contraction. Margins are relatively low at around 2.5% net income. But you also have to consider it's trading around 13 times forward earnings. That's actually low compared to its historical. So with that said, price also reflects that as well, with the stock down about 14% over the last year. This is going to be a pivot point quarter, I think. If they denote some inventory follow through, in other words, reducing the inventory mismatch, if they show sort of a bottoming out when it comes down to EBITDA, and they say things are stabilizing, we may end up seeing the stock break back above that $135 trading range that we talked about just a moment ago.
Yeah, definitely. Maybe some pent up too much short interest in there that might catapult it to the upside. George, one of the things I think that's capping it, maybe you can elaborate on this really quickly, Supreme Court decision on student loans affects Target more than any of the other broadlines retailers. Is that a potential headwind here, because those payments start soon?
Yeah, you have to think about furnishings. If your student is going to the dorms, or you need some additional if you will, decor, apparel, and you also have to think about, again, those elements, which are quite a high percentage of Target's, consumption or purchasing bundle from a household perspective. It's not just food or non-discretionary items where it's concentrated more so at Walmart or Costco. And I think the back to school season might be relatively weak for Target, and they really rely on that on a yearly basis versus Costco, which is not necessarily known for back to school shopping.
Yep, and we'll get earnings in mid-August on this one. All right, great stuff, George. Appreciate it. Yep, George Tillis, Senior Markets Correspondent, breaking down Target for us. So, Kev, I kind of took that in mind, where this stock's underperformed every name. It's below its 50, 100, and 200-day moving averages. They've got earnings in about a month. So I looked at something maybe a little bit longer dated in the call diagonal family to take advantage of. If you think this stock's going to go higher over a specific duration, this might be a strategy that might work out. So looked at going out to the October cycle here, Kev. So giving myself time or duration in this one, about 92 days, buying the 130 strike call, which is currently slightly in the money. That acts more like the stock. It's got the higher delta. And then going to the August monthly cycle that expires on the 18th, and selling the 145 strike call. So it's a $15 wide call diagonal to the upside. You're paying roughly, we've got about, a little bit, it's a little bit higher than what we're trading now. I've got 870 on there. That would be your risk, 870 bucks. It's probably trading closer to 920 now because the stock is up over 1% in today's session. So kind of pushing back against market losses. But the debit that you pay is going to be your risk on this one. You can see from the risk profile, your break even near 133 on that one, so you don't need a massive jump in the shares. But Kevin, your thoughts were, hey, I'm buying something 3 months out, but I'm also taking advantage of that higher implied volatility in the option that I'm selling because that is the earnings week.
92 days until October expiration. So this is a diagonal that is closer to a stock replacement, right? You're buying kind of an at the money, selling it out of the money, or just a little bit in the money. So the delta only gets you to about 36 total deltas, but you can see the upside exposure you have, and you've got time, and you've got attempts to chip away at that net debit each time. You know, you can extend duration on this a lot of times before you get out to October. So a lot of opportunities to chip away. Hopefully, by the time you're done, it'll be a true stock replacement strategy. But right now, if you look at how beat up this name is, this is a way to get in it without having to buy the stock and put out the big capital. This is only $900, a fraction of what the stock is.
And the width of this call diagonal is 15 bucks,
right,
Kevin. So paying less than $10 around that $9 mark for this means that that break even acts like a true break even, where everything above that's profitability. Now, Kevin, when you look at this trade, the opportunity to roll that short option as you get closer to expiration in August, that also provides a big boost for this if the stock kind of continues to grind up towards 145, because you can collect credits, right, on this. If the market's open, liquidity is provided, you can adjust or roll that short option, correct?
Right. You know, this is one that you're selling. It's the August 16th is earnings, so you're selling the earnings week. You could shorten up that duration, shorten up that strike, and get some theta or some movement before that. You went out to the earnings week. Why?
Yeah, we could still pop to view up before day's over.
Trading your account or
not even 1 o'clock yet.
Daily and weekly basis. This is one you can just kind of put and watch, right? So there's several ways to do it. There's always trade-offs, right? The theta number would be a little higher, but you probably have to move your strike in because a 145 strike in a shorter duration won't have enough premium for the risk. So there's always trade-offs on this, but if you go out to the earnings event, you're going to get plenty of premium.
Yeah, and that's why maybe the cost of this diagonal is so much below the $15 width of it, is because you're selling that high implied volatility and option premium in that August cycle. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Yeah, kind of a double bottom on barbecue here. Could be picking up some shares there. I'm gonna wait. A lot of action actually the morning. Got a lot of big price action. See if the end of day is exciting. Double bottom, yeah. Yellow intraday double bottom. Still a little more gap there. But potentially that is the low. I'm not trying to dip by barbecue though. Albemarle. What's the ticker for Albemarle? That's not a stock, is it? Albemarle? I don't know what that is. Yep, agreed, Trace. Yeah, we're still in a nice uptrend. Well, that's nice of you, Guts. Probably try not to do anything crazy. Other than buy 100,000 barbecues. Just kidding, Guts. Just kidding. Nothing crazy. Albermail Marley. Could still be good. Could just be testing the support. Sort of, maybe. Kind of broke out of it, actually. Its rally might be over. For a bounce at 216 here. If it builds more of a shoulder for this head and shoulders. Just long consolidation. Fat finger buy. I just might. I might scale in a little bit today. I don't know. Do like that it looks like it's respecting the fib levels. It basically filled that gap and double bottomed. We'll see. I'll wait. But I'm fine not timing the bottom perfectly in but instead confirming the direction. Well, some people don't like that. Spy. Bit of chop still.
that was the start of the gap. And then we could also see, if things really start to fall apart, a move to our next gap, the 235 level, that light green line there. That was the gap that we formed in May, and that's roughly
if that happens, Trace,
with our 63-day EMA.
I don't know. I'll probably still just follow TA.
Alex and Jenny.
Yeah, Rick, and you mentioned that 315 level to watch. I think the
If it hasn't already ripped,
some propellers
then I will add
about $300 as that sort of that psychological level, but now down about $26 on the session. So continuing to see this
if Icon,
move lower.
I don't know if I would necessarily add without TA if it was Icon.
It's not yet today. So now when trading this name, Alex,
RC is confirmed. I would add just because I think it would rally just on that.
Negative reaction, can't argue with that.
But I think the TA will be there as well. So
goes on as well, not far off of session lows. I looked at buying a put calendar, kind of leaning into the weakness today. I get the arguments for
HG's crossbar is crazy.
bullish. There was tons of analysts that were still very bullish on this name. The news
buy shares and just loan them out.
The stock's done really well, and the stock is lower. And so to me, this could be a situation where maybe you're seeing just kind of an overzealous stock just lose
thought about it, but
momentum.
It does
Rick talked about that
go BK. I mean,
so you want to lean into
you're gonna lose
a
it.
bit, buy a put calendar here below the market. I looked at the 245 strike in this particular case, selling August, buying September. For $4, it'd be $400 in risk. In total, it's bearish, but the nice thing about this is it's very customizable. So Rick had also mentioned the 262 mark, so you could look at something closer to that. He had mentioned 235. You could look at something closer to that. He had mentioned 315, I believe it was, to the upside. You could look at something on the call side at 315 potentially. So it's very, very customizable to whatever the outlook would be for a particular investor.
Did we get our full handle?
Just
Is that it?
to strike availability
Could be.
and expiration availability. So you can make those tweaks.
Low volume gapping up on barbecue.
Particular outlook would be, but again, we stress this every time.
36.40
is very, very important when it comes to the time spread. Still selecting that strike and being as close to that as possible throughout the life of these trades is critical, and you can see that
didn't fully fill it.
That's
annoying.
Is at that 245 mark, which is where the strike is on this particular strategy. So $400 in risk, looking for a downward slide of about $20 from the current share price to 245 over the next month and a half, Jenny.
And we got that post-earnings look here at Tesla. Now to shift gears and look at a pre-earnings look at Capital One Financial, which is down about 2.5%. And Rick, the market is pricing in around a $5 move in either direction here. So walk us through what you're seeing in terms of the technicals. This name, not as interesting, I will say, as Tesla on a chart perspective, but we do still have this earnings event to look forward to.
Well, there is some stuff going on today with this one, though. We are seeing a bit of a breakout above the 114 level.
36.50 on barbecue.
105 or so.
It's only down 3.6 now.
To the upside in the past.
If it rejects this trend line here.
And we're pushing up to the
36.75
resistance mark there. So 114 is that green dashed line there, and we saw a pullback today. We saw a touch back of that former resistance, which now becomes support, and it looks like we're bouncing a little bit off of it. We are still down on the day. We're down 2.5% or so. But the pullback is interesting. This is a common trading strategy people use after the initial breakout. You wait for some kind of pullback to some kind of predetermined level, the resistance level or a moving average or something like that. Then you would look to buy into that brief downward move before the uptrend continues here. Now, the risk with that, of course, is that the pullback doesn't actually reach the level of your target here, so you miss the move. But this is a common trading strategy here that is employed by many people. So it is a bit of some price action here that's worth following today. We are still following along our upward sloping trend line there, starting with those yearly lows near 84. So there's no interruption of this trend today, I would say, despite the rather notable downward move here. So we can see as well that the highs of the year near 123, that would be the mark to beat to the upside. And we've got a ways to go
there you go.
To that point. And momentum is not
barbecue only down 1%. Wow, look at that thing gap.
We would have wanted to see down there on our RSI indicator at the bottom of the screen. We would have wanted to see.
That's crazy. It went green there for a second.
Momentum cross above that 70 threshold, the overbought area, that would be a sign of further strength. It would be kind of like the stock going into overdrive is how it's typically interpreted here in a trending environment. So
that was wild.
Resistance, that's what we would want to push above here, that make our way up to that 122 level and see the RSI moving to overbought. So in terms of support, as I said, 114 is a crucial level here because it represents the old high from our range.
Oh, big red candle.
Breakout. If we were to fall below that, look for the confluence of our yellow 21-day EMA and our trend line coming together right around the 111 mark or so.
I haven't seen any news. I don't know.
2 or more indicators or trend lines.
We're like 8% move from the bottom almost.
They all line up at the same area. It lends some extra weight to the importance of.
I mean, last transaction was here. That was 6%.
Below that, we've got
top of
our
that candle is 9%.
EMA and our 63-day EMA, our purple and
so
orange
liquid,
respectively, pretty close together around 106, 107 or so. Alex and Jenny.
So, Rick, I think it's interesting that this name's still, relatively speaking, in a nice uptrend. I know we're lower today, but a name that has been still up over 24% on a year-to-date basis. So this has actually surprised me when looking at Capital One, how well it has fared. It has been a turbulent storm for a lot of companies that have financial or consumer credit.
It all the way back up to that shoulder.
Appreciate the insight, as always, Rick Ducat, our chart master.
Makes me think the handle is done today.
We're obviously trading it on a day when it's down 2.5%. We do have second quarter
potentially. Wow, Tesla's getting wrecked.
It feels like the total overall over earnings has slightly shifted here, as it was really positive, and now we're seeing today fairly negative. So walk us through in a more neutral.
Oh man, Tesla kept selling off.
Yeah, selling some volatility around an earnings event is
Yikes.
A story as old as time. So we're looking at that for our trade illustration.
Wanted to see it bounce here at this level.
Though, to reduce the kind of binary nature of earnings example trade illustrations, we could have just went to tomorrow's expiration and made this almost an all or nothing
test
type
40
of trade where it was either going to
be if it tests 40, we're definitely
and we'd find out in 24 hours.
What
we've elected
the
to
handle
do for this illustration is reduce that kind of binary aspect of the trade.
Should be fast.
Going out to the August monthly expiration, but still looking at a trade that is very much centered around earnings. Rick had talked about that 114, 115 level being critical over the last year, reaching this level and falling several times. I believe it was 3 in total over the last year. And so what we're looking at here is a strategy that really builds on that. We're selling that 115 straddle, collecting a fairly large credit for that. In order to not have undefined risk by selling that call naked, we've elected to buy wings of $10 in width on both sides, creating the iron butterfly. It's essentially an iron condor where the 2 short strikes are at the same level. It creates this triangular-like risk profile, as you see up there on the screen, with risk in both directions. That, of course, is limited to the width of the strikes. In this case, that's $10. Net of the
I wasn't expecting it to break VWAP today.
$650, which means
pretty bullish.
$350 in risk. This is a strategy that has a wide net.
Makes me think that maybe was the whole handle.
115 mark and goes 650 to the downside down to 108.50 and 650 to the upside 121.50 as those break-even points. But like the calendar spread in some ways, the more you're right, or the more accurately you project using that short strike where this stock would be, the more it stands to be profitable. So unlike an iron condor where if it's inside of your short strikes, you just keep that credit, assuming those options expired worthless. There's no advantage to being more right or less right. This one does actually do better the closer it is to the short strike. So in this case, that's 115. And it stands to make as much as 650. That isn't a likely scenario, so bear that in mind. A trader looking at this, for example, say the stock opened up near that 115 mark tomorrow, would not anticipate, given still the lag till that days to expiration, till the expiration date in August on the 18th, would anticipate maybe a little bit of volatility to come out of this, and perhaps it would be trading for a number lower than 650. Many traders at that point, Jenny, would elect to take the entire trade off at that point, book some sort of gain or loss, as this would potentially be an earnings-only related trade despite the longer expiration. But again, that's going to be subject to availability in the markets and secondary markets being there. But assuming that liquidity is provided, that would probably be an option for many tomorrow morning.
I think that's a great way to explain that versus just like you said, and obviously an example trade that would just expire tomorrow, being that is typically seen as the earnings pure play. But we'll leave it there. Also important to keep in mind, though, for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned to any time, and carrying option positions into expiration can add risk like unanticipated exercise exercise or assignment. Now, coming up next, it's time for FOMO. We are talking naturally all things Netflix. Not its best day, down almost 9% in reaction to some disappointing guidance going forward. We'll break down those numbers coming up next.
PSQH, 110%. This one I think just de-SPAC'd. Or no, this is the SPAC? Yeah, I think this one de-SPAC'd today, maybe. %, on no volume. I don't think there'll be time for TA to go viral. That's what I'm saying. Once there's confirmation of one of them being in, it's just gonna go crazy. So, yeah, that's why it's kind of like I'm still follow the TA. But yeah, I mean, we've had it up till here. We got a cup. We had this handle we called out. There was even a gap to confirm it. Double bottom today. I said you could buy it here. I still don't know if that's the cheapest price you're gonna get this week or next week. Could have been, but that it could have been an entry too. You even have that break of trend here that we drew so handsomely. You get a double bottom, break of the trend right here. Here's your next one. Bond is down 15%. It's hard to fill that gap. Let's bounce in a little bit. Nvidia's down, the whole stock market's down? No.
This is a strategy that is omnidirectional. The best case scenario is actually a price that's lower than the current share price, but it's a neutral bullish strategy because it's done for a credit. And if the stock just doesn't move and stayed here until that August 18th expiration, these options expired worthless, well, it would be a profitable trade strategy in that point. It would perform a lot like a short put vertical in the event that all these options were out of the money. But we've looked at these before. It essentially consists of buying a debit spread and selling a credit spread, and they converge at that same short strike. But in this case, the credit spread is $10 wide and the debit spread is only $5 wide. So it's done for a net credit. That net credit of $1.50 is basically your max profit above $430 a share. However, the best case scenario, and where this thing can expand to as much as $6.50, is at the short strike of $425. And so that would be a scenario where the stock would actually be $9 lower. It's a neutral to bullish strategy, and that's your best case scenario at expiration. So it is a little omnidirectional, but more importantly, it brings that break even down even further, down to 418.5, increasing that probability and likelihood of success just ever so slightly.
This is up 3% today.
Defined, of course, as well. Limited to 350 in total risk. That takes place below 415, which is the final long strike below the market on the put side there. And so neutral to bullish strategy, Jenny, but a little bit of an added kicker if it does just sort of inch lower towards 425.
I think that's really well put. And I also think you made a great point about the fact that we have seen some serious selling post earnings in Netflix shares. It almost feels like 9%. Well, I don't want to discount what is a big move to the downside. We've seen much worse in Netflix. So we've weathered worse storms, it feels like. But that'll do it for our FOMO segment today. Now, coming up next, we will dive into the semiconductor space. We'll be focused on Micron, which is holding on to its 0.7% gain in the session after Wolf Research sees some optimism in this name. We'll discuss that more coming up next.
SQH 137, 139, still going. 140%. Afternoon, Jay from the Bay. Yes, QH, little red candle there. FVWAP down at 23 bucks at 31. Might grab a position back on VWAP. Little pop there on BBIG. Oh, GFAI is ripping again. Almost 70%. I should start day trading these runners. Runners.
By about 4.7% and 14.1 billion, beating the estimates. But if you look at deep down, they did denote that the load factor, 86.2%, was greater than the 80% from Q1. But compared to last year, it was slightly down. It was around 86.9%. So about
XXII is up 33%
last year. And what that suggests effectively is that they didn't get as much operating metrics or leverage from each flight that they actually sold, with the load factors being a little bit to the downside. And with that said, the
regaining compliance from the reverse split.
With American. And if you look over the last 5 years, despite the fact that the stock is up nicely over the last year, about 37%, it's still down over the last 5 years, about 55%. And that's because it has a lot of debt. $32 billion. They gave us numbers last quarter that they can reconfirm
got a pretty high borrow fee
of about $15 billion in debt
75%
by 2025. But if you look at the quarter they reported, they said they paid down around $387 million in debt. So I think that was a little bit lower than perhaps estimates were thinking they would pay it down. With that load factor that was less than the same quarter last year, I think those are two variables that speak to why the stock is trading to the downside, despite what would seem to be a pretty good quarter overall from the standpoint of hitting the numbers, or actually beating the numbers, both on sales and earnings.
Yeah, I think a lot of the story was also understood, at least sector-wide, George. I mean, the trend that we'd seen in sort of the numbers that Delta gave us in terms of that sort of early release, end of June, and then, of course, United just in the last 24 hours as well, has been sort of a slowing domestic travel trend. We know that's weighed on a company like Southwest that is sort of their ancillary, a little bit more leisure, domestic-focused peer. And then, of course, an uptick and some pretty positive recent trends in international travel, which has been beneficial. I think everything we saw here kind of confirmed that message in terms of American. But when you look at sort of the outlook and the projection for the future, I think an argument could be made, at least on the surface, compared to United. They were just a little bit lighter. There just wasn't as optimistic as the United story. And when you're going head-to-head on the same day, you're going to get compared, George. Was that part of the story too, you think?
Oh, absolutely. I think you're looking at companies that are very similar in terms of their businesses. That's obvious, but it comes down to, balance sheet differences. There's a much bigger debt position relative to equity for American. If you just consider equity is around 12 to 13 billion, and they've got 32 billion in debt. So that's quite large for any company. But typically speaking, when you're very capital intensive, like airline businesses or manufacturing, you get the availability from the standpoint of a pass from analysts, and of course from a financial metric standpoint, to have a lot of debt. Now, again, because it's secured by, of course, CapEx or airplanes in this particular instance. So But I think it comes down to even things like interest rates. We're seeing a little bit of a spike in interest rates. That's creating a problem, I think, for the technology names today. We also have Tesla and Netflix, which are falling in sympathy because of earnings alongside higher rates. And I think that, higher rates and debt-laden balance sheets like American has, that's also part and parcel why we're seeing sort of a magnified effect, let's call it that, for Americans. So I think overall, if you look at the high end of the guidance, it was around $3.50 for the next 4 quarters. They inched it higher by 25 cents. Typically speaking, I suggest maybe on a day where the markets were favorable, interest rates were stable, or maybe even a little lower, we may have seen a little bit of a different take on Americans' price action. But again, just considering the bigger numbers, at $15 billion expected debt pay down by 2025 and only $387 million paid down for the quarter, I think that was a little bit lighter than expected, and that might be based upon some of the reduced load factors compared to the same quarter last year.
George, I want to get your thoughts on some of these discussions they've had with the pilots' labor unions, which have been an ongoing concern for not only American, but all of the other airlines. But we did see them reach that deal in principle back in May, but discussions, or voting, starts next week. Could this be clouding the near-term outlook here? Because United has already reached a deal. American said they might copy United, but these deals, I think, they're going to impact all of these companies because they're paying their pilots a ton more.
They are, and it's a huge increase in terms of pay. Pilots say they really deserve it. You also have to think about the demand for pilots and their specialty skills. So maybe they do deserve it, but at the same time, that is the largest expense. It's not fuel; it's actually labor for airlines. So, when you have the pilots union, which again has a lot of negotiating power, that's going to cut into profitability for all these companies, and maybe that's why we're seeing some pressure as they post earnings, respectively, altogether.
Yeah, George, it had me thinking I went into the wrong profession. I mean, some of these salaries are steep, but I think that if you're controlling the lives of 250 plus people, I'd say pay them whatever they want. I mean, they work very crazy hours, but we will leave it there. Appreciate the breakdown on American today sliding after its second quarter update. George Tillis, senior markets correspondent for the network. Now that does it for Alex and myself. Also for Next Gen Investing. Coming up next, we have the watch list with Nicole Pedalides.
She loves CEOs getting huge compensation. Barbecue looks like it wants to break this trend too. Little trend line at the downside. Eyes coming down here. It's finally ready to finish this inverse cup. E-Trade's having issues today. PSQH. Got a little more. Towards VWAP. FAI holding up really well. Morning, Jeff Baxter.
In New York, Nicole, this is a company that did not crazy volatile earnings. They made $2.80 a share. It was $2.61 was expected. Revenue $25.5 billion versus 24.6 expected. Remember, this stock, if you look at the chart, had sold off the last few weeks. So what it really did was recover some of the losses it had for the last couple weeks. Revenue growth of 6.3%, good solid number there. Gross margins 32.2%. That's down from some of the higher numbers from 2022. Selling, marketing, administrative expenses a little higher than it was in 2022, and research and development spending $3.8 billion versus 3.7 last year. So a little more money in terms of research and development, but good solid earnings report out of Johnson & Johnson. And like I said, if you look at the chart, a recovery back to the recent highs. Nicole?
All right. Kevin Hinks, great to see you. Thank you so much. Thanks, Kevin. Now let's take a look at the bigger picture. Eddie Gabor is with us, owner, Key Advisor, Wealth Management. Eddie, as we're here just off some recent highs, what do you think? Because we've got jobless claims and, folks still saying the Fed has all the reason and fodder it needs to raise again and maybe even once more. What are your thoughts?
Yeah, I do. I think the Fed, I think everyone knows, or at least is expecting them to raise rates next week. The biggest risk to me in regards to the market here in the near term is this whole battle with inflation. You know, the last inflation print that we got caused a pretty nice rally because I think sentiment and consensus thinks that this fight with inflation is over. When you take a look at oil prices, that's making me a little bit nervous because oil prices and energy prices was helpful in getting inflation down. And let's not forget either, we were also comping it off of peak inflation last June. So the base effects are going to get tougher here for inflation. And if we get a reacceleration of inflation, that absolutely is not priced in to the market, in my opinion. And I think that inflation is going to be stickier than many believe. So today's pullback, I don't really look at it as any big news. We've had a major run up here, obviously, and some of these names that are down have had substantial run ups. But as you know, we continue to be pretty cautious. We're picking our spots on what we're buying here since this past month. But we're keeping plenty of dry powder because we do not think we are out of the woods yet.
So you're saying that folks are just getting a little too optimistic, thinking there's no recession, inflation is finished, and you want to be cautious until what? What will change your mind where you turn and become a little more risky, a little more bullish?
So number one is on the inflation front. Again, I think the market is pricing in that this inflation battle is done, and I don't think we're near done. And the bigger thing is, I think you're starting to hear more and more people use the term soft landing, that we are not going to have a recession. I respectfully disagree with that. I think when you look at economic indicators and you take a look at the consumer, you got student debt payments that are going to start coming in. Something has to give. This cost of capital that we're in, even if the Fed doesn't raise rates one more time, the biggest problem is the cost of capital is not going to go down. It's going to stay at these levels. We're going to be higher for longer. And with the amount of consumer debt that we have in a consumer-driven economy, with student loan debt as a headwind, where is the growth from the consumer going to come from? So I think we are too optimistic looking forward and thinking that we're going to be able to navigate this perfect landing in a time period where we've never seen rates rise this fast in this short a period of time, and we've never seen debt levels at the current level that we're seeing. So it's been a very resilient market. It's been a very resilient labor market. But the only way you're going to get down to 2% inflation and get labor costs down, unfortunately, in my opinion, is a recession.
All right, so while you think you need an investment strategy here, you said there are sectors that are overbought, and there are others that show some promise. How would you define those?
So right now, the areas that we are bullish in, because look, even though we're bearish on the economy, we have to respect the momentum here in this market from a technical perspective. So last month, we started buying some healthcare. We bought India. And just yesterday, we bought the dip in aerospace and defense. That's an area we've been watching closely. We got a good entry point, in our opinion, yesterday. Those positions are holding up very well today. We think healthcare, aerospace and defense, from an earnings standpoint, are going to have a pretty good back half of this year because there's easier comps. They also didn't perform well in the first 6 months of this year. And then we also looked outside the U.S., and I don't think anyone can question the fact that India is away from China. When you look at companies like Apple and Amazon, India, in our opinion, has a chance to be the next China. So there's going to be tremendous growth opportunities over the next several years there. And for us, we wanted to diversify outside the U.S.
Right. It's interesting how you said India. No Asia, other emerging markets, for example.
Right now, we're just sticking with India. We think that has the best risk reward right now. Because again, you look at Europe, Europe's in a recession. China's seeing a slowdown. So this global economy is slowing down in many parts of the world, and we're just trying to pick our places in an area that we think growth is accelerating, not decelerating.
Yeah, understood. What about some of the areas that have been high flyers? You have had AI anything related to AI. You've had the Magnificent Seven. A lot of excitement surrounding travel as the airlines have been moving higher and cruise lines and seeing a lot of demand. I mean, do you have any interest? I know you've actually put a lot of money on the sidelines to put that to work when you are ready. I mean, what about Meta has been an exciting story. Tesla has been an exciting story. Even Netflix has been at new highs. I know some of these are pulling back. When do you get in on all these names?
Yeah, look, hats off to anyone that picked those at their lows at the end of last year. But I think even those bulls would admit that it's time for a breather in those sectors. And it's healthy for the market to have breathers. It's not a bad thing. And so, you know, if we were in those high flyers, more than likely for our clients, we would be taking some off the table. Those areas, the higher risk areas that have had the biggest run up, in our opinion, have the biggest downside potential if we don't have that soft landing. So we're not going to get in those higher beta names until we get confirmation here in the coming months on whether it's a soft landing, hard landing, or what that's actually going to look like. Because those that have had the biggest run up again have the chance to have the biggest downdraft. And that's when we'll pick our spots and getting in those. And look, AI has been a hot word. Like we joke in our office that all you have to do is say AI and that stock will go up. It is the future, but many companies haven't monetized that yet. So we're going to have to see this AI turn into profits for some of these companies. So it's going to be interesting as we go to the next 2 quarters earnings with these companies that used AI in their conference calls last time.
Yeah. Eddie Gabor, great to see you. Thank you so much. Key Advisors Wealth Management.
Thank you.
Thanks, Eddie. Okay, later this hour, CoinDesk's team will drop by, give us all the latest on the crypto market trends and whether or not we could see the Bitcoin trade, the summer rally, get rid of that crypto winter, right? And we'll focus on ESG initiatives. Our guest says ESG assets could top $50 trillion by 2025. We'll find out why. And of course, talking about Netflix with our panel, big post-earnings move. This has been to the downside. Let's get into all that. But up next, David Darst is standing by, and he is ready to go. He has all his thoughts on the markets and some picks for us, some strategy. There he is.
Got an inverted head and shoulders there on barbecue. Bit of a bull flag too. Looks like I might want to confirm that as the handle today. Fast. Highs coming down here. See if we get a bounce on the low of day. Been chopping for like 2 hours. The VWAP chop. It's a dance I did in middle school. Still doing it. PSQH. Holding up there. GFAI as well.
And now, let's get right to our next very special guest right here at the New York Stock Exchange. David Darst is with us, Chief Investment Officer, Americana Partners. Hey, David Darst, thank you for being here.
Nice to see you.
So let's talk about what's been going on. I mean, you talked about some of the surprises of 2023. You sound a little Byron Weenish when he always used to do the surprise.
That's right.
He used to not make predictions, he did surprises.
Smart of him.
And you're phenomenal, and you've been doing this your lifetime. I mean, what stands out to you so far in the year of 2023 as far as themes?
First of all, I think China's recovery has been kind of lackluster.
Yeah.
Secondly, the United States has had 2 quarters, the first quarter and looks like the second quarter, of 2% growth, which are well above what everyone is expecting going into this year. I think the artificial intelligence enthusiasm, which you've just been mentioning, has been another surprise. There have been a few others that are just wacky, such as Prigozhin walking around Moscow, you know, and meeting with Putin. Okay, those are other surprises. But I think from an investment standpoint, the enthusiasm, how it's dragged up the others. If you want to look, Nvidia, Tesla, okay, all of these. Google, Alphabet,
why does everyone call it Nvidia?
Of the total gain. The total gain 17%.
Right.
So the market's really done well. I think the Fed's another surprise. The Fed has continued the rhetoric, and the market continues to not believe the Fed, Nicole. They believe that they're going to pause and then take it down by year end. And the Fed says we're not going to do that.
Yeah, I'm not sure why the market doesn't believe the Fed. You know, they seem very adamant about continuing to raise rates in order to fight inflation, and there's no sign of cutting rates this year. I mean, that's not till 2024 most likely, right? Or is
another surprise is the huge inversion of the yield curve. The 10-year versus the 3-month, the 10-year versus the 2-year is negative. It should be a positive slope. It's a negative slope. That is reflecting investors' feelings that we will have a recession.
Slowly melting down.
Or maybe even starting in the first half of next year.
If we get a flush.
Like the economy's hitting on all cylinders.
This bigger inverted cup and handle.
Just this morning, 15 months in a row down. It's a very
new low of the day there on SPY.
The last 10 recessions
that took forever.
So I would bet that we're going to have a recession.
Look, and an inverted yield curve also predicts a recession, right?
Totally.
I mean, those are all recessionary indicators. That being said, and you know, if that is to happen, then that's why people think that the Fed is likely to cut rates and reverse their strategy, right?
Another big surprise. Another big surprise there. I don't want to add to the earnings picture for the first half. It's surprise to the upside. Everyone was speaking. Our dear friend Mike Wilson of Morgan Stanley was
451.83 next.
It's not
maybe
right, you know, because basically the earnings have come through so far. My feeling is that this is all being pushed out into the future by the enormous stimulus that we did have, before, and there's this artificial intelligence over enthusiasm that's really caught everyone else. You take a stock like Microsoft.
That's one that you have on your list that you like.
Microsoft.
That's a pick, right?
Yes, it is. They have this co-pilot product that was announced this morning. You read about it. They're going to charge everybody $30 for this. They have 1 billion users. They have 1.5 billion,
1 billion users
devices out all over the world. And you combine with Microsoft, you combine cloud computing, where they compete. They compete with AWS, Amazon Web Services.
Yeah.
Enterprise computing, they are the dominant factor. They're the behemoth in this, and now artificial intelligence.
Right.
So this is a very good, complete package. Return on equity, which we've talked about many times,
E-Trade so laggy.
as one of the dominant long-term drivers of a stock's performance.
Close that
return on
short.
equity is 31% over the last 10 years.
Yeah.
So this is you're hitting on all cylinders.
Right.
Yes, the stock, Nicole, is up 45% this year, but it was down 29% last year.
Look, Microsoft's been a great one. It has been a great one for its shareholders over a 20-year span. When you look at it over the long term, it's a dividend payer. It's been at new highs. It's been a great performer. It's a name you've liked for a long time.
They started the company in April of 1975 in
There you go.
Albuquerque, New Mexico. I've seen a picture of the 13 founders, and you'll be happy with this. 3 of the 13 were women.
Look at
starting
that.
Microsoft.
Okay, we'll take it. We'll take it. You know, another name that you liked at one point. You used to like some of you liked. Was it Exxon?
Yeah, we
and
like
Johnson and Johnson.
Love those
Johnson,
still.
How about Johnson and Johnson? I mean, it hasn't been that. I mean, today it's moving higher, it's gapping higher, but it had a tough year,
It's
and
been
that was a
held
name
back.
you
It's
liked.
been ignored. It's a defensive stock. It's been ignored. They've had the issue with talcum powder. They've
Right.
been spinning off the Kenvue, you know, the consumer
we have
products.
That here. We have that here.
Love, Nicole, love that stock.
Yeah.
22%
So
return on
today,
equity.
Today, I know it's up 5-6% today, but would you buy into it now?
Yes.
Yes.
And you're
so you
getting
like
a nice yield there.
Yeah.
You have, to me,
All right.
this is exposure
And
to pharma.
Exxon was another one you liked.
Exxon,
You
I still like.
that
I
one.
still like Exxon.
All right. How about we get to AstraZeneca, which is one of your actual real picks. You also have
yes.
genuine parts on here, T. Rowe Price.
Okay, AstraZeneca, they have already they've got 30 late-stage trials, and they've basically made it a commitment to have 15 new drugs by the year 2030. So 7 years,
Right.
15 new
So
drugs
great pipeline.
approved. Great pipeline,
Yeah.
The stock yields 2.2%, all right? You've got this guy, Pascal Soriot. He's been there for 10 years, okay? He's a tremendous asset allocator in terms of where to spend oncology, all right?
Yeah.
Rheumatoid arthritis.
Yeah.
And they just bought
Big.
Alexion. Remember, they bought Alexion in January of 2021 for $38 billion, and that gives them exposure to genomics. So this is, and it's been neglected. It's flat for the year.
Yeah.
And it's been neglected because everybody's been caught up with this technology meme. Healthcare in general, and I'd put J&J into that category,
Right.
have been neglected this year. Nobody's friends. And this is where we want to start looking where the stocks that have no friends. T. Rowe Price is another one, Nicole, that has no friends right now.
Quickly,
The analysts, okay, T. Rowe Price is a money machine that basically got slammed by the stock portfolio performance was not so good last year. They put in a new guy, Robert Sharps. He's the CEO now. Just this past year, that one. Listen to this. It yields 4.2%, and has no debt. $8 billion in shareholders' equity, and they got $4 billion in cash. Nicole, please. Put some of that in your portfolio and forget about it.
Yeah, you also had genuine parts on there, but just quickly on some of the big, you can give me your thoughts on that, but just some of the big sectors, financials, metals and mining.
Energy.
Energy. These are some of the, used to be some of the go-tos, you know what I mean?
Well,
railroads.
Transportation. You mentioned earlier in the show the airlines, the trucking, the railroads. They've been doing well this year. The transportation has far outpaced the Dow, and it's doubled the S&P 500 so far this year.
Yeah.
But coming back to genuine parts. Speaking of transportation, are you ready for this? There are 285 million cars on the road in the United States. 285 million. The average age is 12 and a half years. You need parts. You know this.
Yes.
You need parts to replace.
Yeah.
They've got 2,600 outlets globally in the United States and outside. It's started in Atlanta, Georgia. It's 100 years old. 2 more years, it's 100 years old. Stock has a return on equity of 21% and an operating margin similar to the drug companies. It's a very good operating margin in the.
They have NAPA, the auto parts.
National
right?
Association.
All right, coming down a little more here.
Association.
And look, you said 12 and a half years. Ultimately, that 12 and a half years that people are holding
New
their
low
cars
of
longer.
the
Costs so much
day.
to buy a new
Yeah.
car or to finance cars. Used cars are high, and that's a 20-year high, really. People are holding their cars the longest.
It's a 20-year high.
All
This
right, we have to
return on
wrap it
equity,
up.
22%, which is the same as Johnson & Johnson's. Come
All
on.
right.
And it's right now 33%. It's just
230, only 30 minutes per hour.
David, I have to go. If you were at the cage match for Elon Musk and Mark Zuckerberg, where are you going to put your money?
All I know is my grandson Charlie, whom I adore. I was reading him Little House on the Prairie. He asked me could I read him a bio of Elon Musk. He didn't ask me for a bio of Mark Zuckerberg.
Okay, so there you go. David Darst, Americana Partners. Love having you here all the time. Thank you. And hello.
Blushing more there.
Okay, coming up next, an in-depth look at crypto, the markets surrounding crypto. We have the team here with us from CoinDesk to get some details on some of the recent moves in Bitcoin and a lot more. Coming right back.
Considering a long here. Yeah, J&J is still good. Might be getting that push to 451.8. Got back in here, then closed it out here. I got scared. Not enough formations. I'll just wait now. Tesla's down 9%. SPY's flush a little more. GFAI 88%. Oh, I think broke out some more. Wow. GFAI, almost 100% there.
Crypto, digital assets to move these higher. And which ones do you focus on? I say Bitcoin, right? Because that's the one I guess people focus on the most. But which ones do you focus on most closely each morning? I mean, what are your top three?
So in some ways, as mentioned last time when I was on with you, is sort of there's a bifurcation of the market. There's Bitcoin, Ethereum, which do have the regulatory certainty of having CFTC approved futures markets for both those. And then there's everything else. And what we saw last month was that continued bifurcation. You had, again, positive Bitcoin news, positive EDX was an institutional exchange that was going to be much more of a TradFi look to it, as opposed to all these crypto exchanges that incorporate custody and trading
going
into
long.
one, all vertically integrated to exchange.
And
So
I'm
that
gonna
was very
try a little
supportive of
daily.
Bitcoin and Ethereum. But it left everything else out, all the what we call altcoins, the Solanas, Cardanos of the world. And what's been post Ripple was really kind of the breakthrough of having it not deemed a security on
Whatever,
exchanges.
dude.
It really eliminated this tail risk scenario of these alternative coins being delisted by exchanges and having all the liquidity and trading volume dry up on them. So that's really been supportive.
Coinbase took gap higher that day. Coinbase was running hot that day that we were talking about that. Yeah. I mean, when you look at what's going on here, where's the opportunity?
Oh, sorry, it really eliminated that risk. Sorry, it really eliminated that risk
Oh,
from
knowing that
Coinbase
happens.
as a business model, because they were no longer. It really showed that when tokens are listed on these exchanges to retail investors, there's not the similar expectation of profit, which would then deem as security, as would an institutional token sale, which was in the Ripple case. So what it really did is it added more nuance to what is considered a security. It's more of now it depends. It can, and then actually in the Ripple's case, it can be both, depending on how it's listed to the end investors. So by removing that from that risk from exchanges, it really supported not only Coinbase but all the alternative tokens broadly. And so with that, mentioning sort of Bitcoin, Ethereum, and everything else, we've had now sort of what was a widening between these markets now starting to converge a bit. And with that, when I think about sort of Bitcoin, Ethereum, and everything else, we have our coin market index, which is a very broad measure of the market. And we start to see that outperformance of that broad index versus Bitcoin and Ethereum as these altcoins play catch up. So Solana, Cardano, Stellar, Cosmos, a lot of these other tokens that are supporting this DeFi decentralized ecosystem have in some ways played catch up to where Bitcoin and Ethereum were.
Okay.
And I think it's worth noting that, and you had this in your notes about
Try and ride these all the way to VWAP if we get there.
Something like Bitcoin
30 minutes of power hour.
NASDAQ, right? You could say more near term, but really over the last 2022.
Oh, what the heck? I got him way out of the money. What? I was one strike away. I'm at 454.
Bitcoin had less volatility, and I think that some people like that, but they have to believe that there is long-term growth prospects. I mean, there are people who say Bitcoin 100,000, right? Or more, million, or whatever. I mean, people have driven some really crazy,
all right, whatever.
Out there, far out there expectations. Do you believe overall, I know you do a lot of research on this, do you believe in DeFi, Bitcoin, Ethereum, and all these other products that you were talking about, Solana and Cardano?
An RSI divergence there on the 5 minute.
Opportunities for folks, maybe for a longer term investment?
I think it really depends, and part of that has to do with the token
kind of a YOLO bit.
And what sort of utility it provides to the ecosystem. I think in
much
general,
barbecue have right now?
Decentralized finance, any sort of tokenization, especially once we start
presently,
putting real-world assets on chain, that's going to result in a real live use case for Ethereum, for all the other protocols that are built on top of not only Ethereum blockchain, but supporting blockchains as well.
20,000.
Once we can do that, once we have those use cases and have the tokenization of real-world assets, that is going to provide the.
I've been trading it, so
the solution.
Sold out of most of it
DeFi
yesterday. Yeah.
What we have is this great tech, but we're still looking for a way to
picked up some today, just to temper my FOMO a bit.
More liquidity as well.
Just in case this was the bottom of that handle.
Support higher.
I don't want to give it.
Todd Groff, Thank you. And I
A little
know
more
we'll
time.
have
It
to
still
have
hasn't broken
a
out of this.
Bitcoin next April, and
So
we'll
I'll
have
probably
to
pick up
talk
more
about that as we get closer
tomorrow
to that key date too. That could sometimes serve as a
or
catalyst.
today if we start to break out.
Thank you.
Absolutely.
CoinDesk.
Thanks, Nicole.
Still ahead in the second half of the show, ESG investing and company initiatives continue to be popular, but some companies, are they making the right ESG moves? Let's talk about this next with our guests. We'll tell you what to look for. And of course, as we head to break, we'll take a look at winners and losers in the S&P 500.
Can't believe I got so far out of the money. That was stupid. Not a whale, not at these prices. 20,000 shares is a whale when it was at $10. A lot of FUD. About what, like the delisting? SQH consolidation up there. GFAI about to hit 100%. What a ripper.
Retreat we've seen from the 50-day moving average, and how that was a test of kind of the middle of the range that we've been in since last year. I always say the upper, the lower extreme are significant, but if you're testing the middle and you fail, it opens up a door for a retest of that lower extreme coming back into play. So ultimately that would mean yields to the upside. I'm keeping a close eye on what we have been seeing, because while investors and traders have become a bit callous to the fact that we've been holding these upper levels, if we were to get a breakout, and don't get me wrong, I think that would involve a sudden shift in terms of some of the data we've seen, or a big time change in terms of the rhetoric. But if we were to start to see yields work their way back to the upper extreme, if Treasury futures were to work their way lower, as mentioned, after that failed attempt at the 50-day moving average, Nicole, this could create quite the headwind for stocks. We've seen the dollar coming off recent lows as well. Commodities inching up here. There's a few flags flying, I guess is what I'd like to call them, as we come off these highs, the run-up highs that we saw into yesterday. So lots to keep an eye on into the end of the week.
Yeah, understood. Ben Lichtenstein, thank you so much.
Lichtenstein.
Appreciate it. And folks, before I get to ESG, you should take a look at SiriusXM. The stock is up 35%, SIRI. They've had they had a short squeeze, Liberty Media, that arbitrage backfired. This was on the 19th.
Oh yeah, Siri.
Shares have been hitting circuit breakers. This is breaking news right now.
Where were you guys?
Keep an eye on SiriusXM.
We got Trader TV giving us news now.
It's been a very volatile 10-15 minutes, up 36%. And thank you to the team for pulling that up so quickly. Appreciate that. Okay, now let's get to ESG.
It's been in a squeeze.
What it means for the balance sheet for companies promising more ESG initiatives and goals. Joining me right now, Robbie Sundberg, Managing Director, ESG and Sustainability Practice at Embark. Thank you for being here. Your thoughts on ESG? I mean, it was extremely popular. Everybody was on board. Then we had some concerns about the market, and some people jumped ship. Where do we stand on setting ESG goals?
What was she saying as a catalyst?
Determined thing to happen versus somewhat of a fad.
On mute. Thanks for Nicole for having me. I know we've kind of been in a little bit of a lull as it relates to
What's going on with Siri? We just got news from Trader TV. I don't think I've ever heard that happen. And it was short squeeze news. Dude, all my brokerages are jacking up. No Siri traders, I guess. Oh, nice, Gats. Well done. I thought you already closed them. You just gotta believe. I got 450. What did I get? I got 454 dailies. I didn't mean to get him out of the money. I'm racing that shot clock. I don't know if we're gonna get a bounce. I do like that RSI divergence though. We have so many different levels where we can make more cups and handles. We had this little inverted cup handle. That one actually wasn't. That was that choppy day. This is maybe the first one we had right here. Right here. Handle. Then we're making a bigger one. Handle. And then we're making a bigger one. Right? That one retraces too. Yeah, 50%. I don't know if there'll be time today, but there is. There's over an hour. Nice little inverted head and shoulders down here. Confirm. Oh, 10% upside. Nice. Might be traded on charted long short trade. Nice. Yeah, I think some brokerages have that as well. Siri is resumed. Resumption. It's actually not up that much. It's only up 30%. GFI is up 100%. Thing hasn't been halted at all. What's the float on here? It's a huge float. $500 million? 27 billion market cap? What? Wow, I didn't know Siri was such a big deal still. They actually make a lot of money. It's a legit business. That market cap's crazy. Maybe not though. I don't know. I can't believe Siri is such a thing. Like, what? This is a $28 billion company. Don't be calling it a boomer company. Money laundering. They do over $2 billion a quarter in revenue. $500 million in profit. New high there on it. The chart does look awfully pretty. There you go, barbecue. Just keep projecting there. Let's fill this gap completely. I'm gonna trap all of us. XXII, 30%. I remember when GME used to look like this on days. Actually, not quite like this. This is more like what, HKD, top. This is almost Chinese looking. Yes, Chinese. Oh, they operate too. They have Pandora also. I didn't know they own Pandora. Sirius XM and Pandora and Off platform. Never heard of Off. Wait, no, Pandora's a different company. Cartel. So I think Pandora's traded also. Yeah, isn't this delisted? Oh, maybe Sirius bought them? Well, still going.
Subscribers I have for AVOD, how well that's doing. They gave out no numbers on the actual number of people who churned off the service because of password crackdowns. So there's a lot we don't know. To your point, yes, the fact that they're talking about boosting its free cash flow estimate to $5 billion for the year, that's pretty big. The sports event you mentioned, I don't really consider that a sports event. It's going to be a golf tournament with a bunch of popular people from racing and from the golf industry. How many people really want to watch that? But let's look at what we know. They have 239 almost million subscribers globally. They also said that what they're doing right now with the new product experience will roll in over several quarters. So we got some great data from them, but we really have to wait a couple quarters to see the true impact to the business from password sharing and advertising.
Right. I mean, I know they referred to it as being experimental stuff, but I don't know either how many people will be interested, but something tells me the way golf has been such a hot topic with the LIV golf and people love celebrities, it may take off. It may be a genius move to have something like this. Your thoughts, Jamie, on what stood out to you? I know they got rid of the basic, most inexpensive ad-free tier. We just finished talking about the password sharing. It's hard to know with that crackdown. What stood out to you? Tell me some things.
So there are definitely a couple of things to look at. I think like a number of people, first thing I did look at was the subscriber ads, which were certainly quite strong versus expectations. But what is really interesting is seeing how that did not necessarily directly contribute to outsized revenue growth on top of that subscriber growth. So I think that a couple of other things which I definitely noticed is initially looking at the earnings announcement, the word strike was only mentioned once in the full letter to shareholders, and on the earnings call as well, management was not
all right, 5 minutes.
really clear in terms
Power
of
pump.
long-term effects of that. What we've been hearing from the experts that we speak with is that Netflix probably has about a year of content in the pipeline to be able to have some new shows be turning up on the platform, but understanding what the longer-term impact of this could be when they might start to feel some pain from that is definitely an area where there's still a bit of uncertainty.
Yeah, let me ask you, because I'm glad you mentioned the strike. I guess these things, that won't really hit a lot of these streamers until next year, and Netflix, as you said, has a heavy content. Just quickly, Jamie, as you looked at the global subscriber growth, when you look at home versus abroad and market share and penetration and the possibilities for even having more folks get on board, Jamie, I mean, where do we see that? I mean, is there anyone who could dethrone Netflix, or is it still the leader, and why?
So there are a couple of dynamics at play that I think are worth highlighting. Is one, when we particularly look at the global footprint, one of the major advantages of Netflix is the fact that it has huge, not just international presence from where it's rolled out a streaming platform, but also the content production capabilities it has there to do local language shows, which will then have that sort of higher resonance within those local audiences. And this is one thing which competitors do not necessarily have. So while Hollywood is shut down, Netflix is able to perhaps continue to some degree
I don't know, this is looking kind of weak.
content for those audiences. And one other thing I think it's worth circling back to
Fair
is the
flag.
fact that within the US, Netflix was able to kickstart
Good
some
power
growth
gives
there
us.
after a couple of very sluggish quarters. One thing we've been hearing for a while is that the US market is quite saturated, but of those 5.9 million subscriber ads that Netflix had last quarter, over 1 million of those were from the US. And coming after a couple of flat quarters, that's definitely not nothing. So it's worth highlighting that they have been able to start to get things into gear
Not nothing.
within the US market, on top of some of the international tailwinds they have there.
Right. Dan, tell me your thoughts, because we talk about the content of the Netflix, and so many folks' favorite shows are on Netflix. They have obviously a huge library as well. We think about the likes of Disney and Hulu and Peacock and all the others. Who are the close second and third to Netflix, and how worried would I be if I were Netflix, if at all?
If you're Netflix, you're not
Hey,
worried at
barbecue
all.
below
More
view up there.
subscribers than anyone. Their free cash flow, nobody can even come close to that. They deliver high quality video at scale, which they've already proven. They also said that they're more than a year out from any price adjustments in their big revenue countries. So what they've told us is they're not going to raise pricing for at least a year. Netflix is the leader in the space. Now, their ARM, or what they call average revenue per member, did dip slightly in every territory that they were in, but we're going to see additional revenue come from the ad model over time. They did talk about how they're also building some of their own ad stack in-house, which will give them more control, which Netflix loves, is control. So Netflix is clearly the leader. If you just look at the P&L and you just look at the free cash flow, nobody comes even close to that. Most of the streaming services out there right now are all losing tons of money. Peacock just announced they're raising pricing. YouTube Premium announced today that they're raising pricing as well. So Netflix coming out and saying they won't raise pricing for at least a year, it's a pretty interesting move on their part.
Great to see you both. Dan Rayburn, streaming media analyst Jamie Lumley, Third Bridge, thank you. That's going to do it for us, folks, here for the Watch List. I'm Nicole Petalides, live from the New York Stock Exchange. And thank you for watching, but keep it right here. Market on Close is next.
All right, 2 minutes to the hour. Respecting this downtrend still on barbecue. Yeah, Tesla never really bounced today. A little move to VWAP, but much. Yeah, it's looking like a bear flag down here. Go on. There you go. Yeah, power hour. That's right. Siri halted down there. Halted down for a VWAP grab. GFAI is coming down to VWAP as well. Flashy flush on SPY. Little inverted cup may be forming here. BBBYQ, hanging around VWAP now.
Very good pun, by the way.
Oh,
rolling
yeah,
down the hill there.
They just set the truck and let it roll down the hill.
That's
literally.
true. But listen, you hit the nail on the head when you said these things were well telegraphed. Everybody knows Elon Musk had a plan. It was to short-term sacrifice margins for more deliveries. And if we want to say whether or not he was successful this quarter, he was successful at doing that, right? However, now investors are concerned that margins won't be able to recover well. And so that's where we see some of the selling coming in today, because Tesla had better than expected earnings. They beat on the bottom and top line. Gross and operating margins, however, did fall year over year. Capital expenditures swelled, free cash flow grew during the quarter, but the company saw a huge measure of more deliveries and more productions versus last year this time.
Which is good.
It is good.
So they kind of literally, here's the intended pun, delivered on that, right? But it just kind of seems like, I don't know, I guess people really thought that they were going to be able to maintain the margins that they did before they cut all the prices, which makes no sense, which is again seeming like a sentiment thing where we can kind of blame the markets over eager optimism on today's pessimism.
It is because in the past we've seen Tesla underpromise and overdeliver. And so maybe markets expected a little bit more of an over-delivery than what they got when it comes to margins specifically, because he did over-deliver. Tesla did over-deliver when it came to productions and deliveries. But analysts are relatively mixed on what happened here. TD Cowen raised its price target to $200 from $150, keeping it at a market perform rating. Deutsche Bank also boosted its price target, but to $300 a share from $270, maintaining a buy rating. However, we did see Morningstar downgrading it to a sell from a hold.
Oh, wow.
But this stock is still really strong. It's up around 115% year to date.
It seems like the analyst reaction here is still a little catch up. A lot of the price targets getting pushed up had been already surpassed. So there are a few, though, in there where the analyst has actually been bullish, is now pushing it up even more. So that kind of complicates our way to read this. Kevin, how do we, as traders, try and separate profit-taking events after big runs from turning points? Because, you know, as they say, you don't ring a bell at the top, but in retrospect, there is one. There's bottoms too. I'm not saying this has to be a top, of course, but how do we kind of try and separate those things?
Well, from a trading perspective, Oliver, you understand that stocks get overbought, stocks get oversold. There's no straight lines. Very often there's no straight lines, especially on the upside. And so I believe that most traders were ready for this, or at least could have telegraphed this coming. What should catch the eye of traders is good news wasn't perceived as good news. And those 7 stocks, if you want to throw Netflix in there as 8, you can, that led this market higher, are all down today. Is that a new sector of the economy that we should look at? Should we group those 7 or 8 together and watch them individually or as a group? Probably. That NASDAQ move, you're right, Oliver. You would have thought they would have gapped these lower and then held, but it didn't. It's extending losses as the day goes on, and that's starting to wear on the S&P. It's starting to wear on the Dow that was significantly higher. Now it's not as high as it was. But higher yields aren't helping. The higher dollar isn't helping. Crude oil prices that are starting to creep higher, up today but off their highs, they're not helping. And now you've got earnings that are working against some of these mega cap tech. And so all things considered, this is just a big pause button in the rally that has got such big percentages, Oliver. But there's still some names, as you know, like Netflix, like Meta. They're up big for the year, and Tesla, but they're not to their all-time highs yet, right? I mean, Netflix's all-time high is $700. They're clearly the leader. Is that a cautionary tale for AI going forward? I believe it is. I believe it is, Oliver.
Well, the way we can get hyped up about stuff, right? Tesla sell-off too, is occurring right on the chart that now fits this downtrend off the all-time highs. Technically, still, that's what I talked about yesterday. Is like heads up, Microsoft and Nvidia broke out. Apple's been doing the same thing, but there are tiers of leadership, and actually Tesla's somewhere in the middle. Big percent move off the lows, but still technically trending lower off the highs. Kevin, just real fast, do you think the selling in bonds has contributed to the weakness here today?
Absolutely. Higher yields, even though you made a good point. I think that range on the 10-year is 3.7 to 3.85 right there. If you look on the 1-year chart, it spent a lot of time right there. It broke out for a couple days, like you mentioned, up to 4, but then came right back down. Yes, I think higher yields, higher dollar, weigh on stocks absolutely added to what we saw, I think. But earnings, this is a market with a lot of big macro stories in terms of yields and the dollar, and some micro stories in these individual names, Oliver.
Thing about Tesla, at least, is they're still doing almost 50% annual growth. Netflix is kind of flatlined down to a single digit, and that's where I feel like it might be particularly hard to stomach after the stock doubled from August last year, Anita.
It might be. And so while revenue did grow a little bit, just in the single digits, it came in lower than expectations. And even though earnings were better than expected, this company is seeing a lot of selling happening today, and it's likely because of those revenues. But guess what, though? The password crackdown actually worked, because we saw way more global streaming paid memberships and global streaming paid net ads for this quarter.
New low of the day, they're on Tesla.
Margin swelled during
down
the quarter.
9.5.
And free cash flow also grew substantially from a year before. But one thing that was not in a lot of headlines I saw today, Netflix decided to axe its cheapest non-ad bare bones plan. It was the $9.99 plan, but it pushed more people for the $6.99 ad-supported plan. I can see why they did that. You get more people in with a cheaper plan by having that, and maybe you recover what you would have lost with the $9.99.
But if you were doing $9.99, now you're going to get hit for 15 or ads. Boy, I'm going to have to check mine. I hope it doesn't roll over to that new 15 until payday tomorrow.
Well, you do have to check it. So to your point, the first or the second year I had Netflix, my bill had gone up, and it was an incremental rise, right? But I barely even noticed it. So,
they might do this. This is a pretty big one. Yeah,
this is a big one. You'll notice that for sure. But that's how they do, and they're playing around with the numbers to get the desired revenues, the desired sales that they have. But today, the revenues just did not make it.
Yeah, and then with the strike going on, they got us all watching Suits. I'm paying $15 a month to watch a show from
New low there on SPY.
From a decade ago.
You know what?
Meghan Markle pre-princess? Like, what the heck, Netflix?
Now, we know that is a marketing ploy, right? A deal that they have. However, you bring up a good point about the strike.
This was up 3 today.
Hollywood now. So writers and actors are on strike for the first time together since 1960. And so the company did not say specifically how this impacts their bottom line right now, but we can bet that it may impact in some way.
Yeah, we can see.
We can see
the content's different.
It's content. The company has completely halted on content for the moment in America. Now, we do know that Netflix has a substantial amount of its content coming from international sources. However, who knows how large this strike could get, if it may touch some of the international partners. True. That's one thing. And then we don't know just how much more it will locally impact as well.
All right. So they've got a pretty clear, challenging road ahead. All right, both down big. Thanks, guys. Kevin Hanks, Renee Young, with the two big stories of the day, of course, but also the surprising beat for jobless claims caused a little bond sell-off in the background. Tim Urbanowicz joins us from Innovator ETF. She's the head of research and investment strategy. And Tim,
high flush in there into close. Well, not into close, but in power hour, I guess.
Market. Bonds down, stocks down together.
That's the drop in two. Oh, yeah, SPY's flushy.
All right, good thing we did a deep dive there on our stock movers. We'll come back and talk some of the big picture and put it together, Tim. And then we're going to trade some options, of course. We've got a good show coming up over the next hour and 14 minutes.
Bottom of that cup. 451.21. GME's not selling off with this. It's all just mega caps. Same things that brought it up here. Tesla 10% on the day. Wow. So the fact that it didn't hold that support, it's not very good. OPEX tomorrow too. Yeah, neg's not looking too good anymore. Waiting for a green day to probably get out. Not good for this week. Should have a bounce here tomorrow or next week sometime. Market fakey. I didn't think you'd show your face around here. New low of the day there on SPY. Down 0.76%. Boom. Barbecue popping a little bit up there above VWAP.
Side buffer ETF over a 2-year outcome period, and what's exciting about this is we're offering investors upside exposure to a cap of about 16.6%.
Did BBIG have a court hearing?
We really view this as a very good tool to help
I don't
investors
even know.
get cash off the sidelines, get it into the market. You look at all the headwinds that were there at
looks
the
good to
beginning
me.
of the year. So many investors sold out. They went to cash. They missed out on this 20% rally in the S&P, where a strategy like TTOO can really help those clients who are nervous stay invested or get some of those dollars that are just sitting in cash doing nothing for them into the market. As we all know, over time, the equity market is one of, if not the biggest generators of wealth on the planet. So to be able to have a strategy that can help get more dollars to work, we think is very powerful in the context of an asset allocation.
So your other funds that we talked about in the past have a buffer to the downside that kicks in at some kind of significant amount lower. I mean, this thing is it's a purported 100% buffer, so it's basically just only the cost of the expense fee for the ETF. You're not getting any downside exposure to the broad market.
That's correct. Point to point over the outcome period, the expense ratio on the ETF is 79 basis points. And I think if you look at the volume, before I went in to do this, we saw about 500,000 shares traded day one, a few 100,000 shares traded day two, and already a couple 100,000 shares traded today. I think it shows you just the demand and really what our investors are feeling out there. How do we get into the market? Let's get some of this cash that has missed out on the rally thus far to work, but still keep a cautious and a risk-aware stance.
Risk-aware. That's a very good way to describe this fund. It certainly is not outright bearish, but it is a cautious participation to the upside. Thanks for the update. Always an interesting batch of funds you guys are offering. Thanks, Tim. Joining us from Innovator ETFs at the floor of the CBOE, by the way. All right, let's maybe get a little bit more discreetly trading bearish with Gareth.
More lows on the SPY.
Stocks.com is a chief market strategist. Was waxing pretty cautious bearish last time we spoke.
Days like these, I wish I just held my shorts through all of it.
Bitcoin's
Opened them up here.
I know you were fading both.
I closed them here. Missed this whole move. No, I got back in actually. I got some of that.
Be the beginning of some vindication.
Got back in here.
I think that today is kind of a recognition that reality
closed.
isn't as good as people
Got
are
back, got in and out here a couple times, but got back in here.
We're seeing yields kind of dropping as well as other
Closed.
things that usually signal a move up in markets, but instead we're seeing down.
I don't know how I'm not.
And what we're really seeing here
It's
is
like all the random trades in between there is how I'd lose profits during the day.
Because with Tesla, it was margins. Margins are not great. That means they're having to cut prices
Makes sense.
to get
Buy
buyers
flushing
in the door.
down.
With Netflix, they beat on revenue, but excuse me, they beat on subscribers, but their revenue missed, which means they're making less money per user or per subscriber. Both of those are signaling that the economy is not as good as everyone thinks it is, and everyone's stuck on this Goldilocks. Like somehow magically, for the first time ever, the Fed's going to engineer this perfect landing. It's not going to happen.
So with bonds selling off today after good jobless claims, it sounds like you're attributing the weakness in the stocks, though, more to the underlying earnings than like some bond-driven catalysts circa 2022.
Yeah, I am. I definitely am attributing it to more of the underlying economics with earnings. I think it really kind of freaks people out. Here we had the first two big tech stocks to report, almost $1 trillion one in Tesla, and Netflix is Netflix, and both earnings reports are seeing almost a 10% decline in stocks, which had, by the way, gone parabolic. So they would have had to have reported an amazing quarter to actually justify where they are. But money has been rushing in. Money hasn't been asking questions. It's just been piling in. And that's usually a recipe for disaster, and it usually marks tops in markets.
Can you give me an idea? We love the details as traders on how to approach these moments of potential trend reversal. As someone who's been looking for this downdraft, how are you going about holding, taking profits? What's the approach? Do you sell upside in these companies, buy downside, hold for how long? I mean, what's kind of the right way to know if this is a real reversal and how to take part in it?
So the way a technical trader works is we now take the highs on Netflix, the high on the NASDAQ 100, the high on Tesla, and that's our level to trade against. So right now, that is the high, that is the pivot top until proven otherwise. And so basically what I would do is I'd look to buy pullbacks into major technical support, but just quickly, and then short as we move up towards those levels. If we get above those levels, then as a technician, you have to say, okay, I was wrong, and we're going to go higher. But I'm going to guess, considering the volume, considering what we're seeing in the economic data, I do think that we're very close to a major reversal, and maybe look back on this and saying this was the rally which almost touched all-time highs, and now we're going to head back down. I think October lows will be seen by 2024.
Wow. That's a pretty big call, Garrett. I mean, we're talking the October lows, right? Like the lows of last year's bear market, 3,500 for the S&P?
Yeah, and again, I think people have to recognize that, you look at the economic data. The economic data that's been strong has been jobs, which you got to give credit for. But I think jobs directly is related to COVID and how hard it was to find people to work. So employers are very hesitant to fire people because of what they experienced during COVID. Once the economy slips into recession, which I do think end of year, early next year happens, that will start to take over. We're even seeing it in technology. And then you look at things like consumer confidence, which has been strong, but that again is directly related to the stock market. When people see their 401ks spiking, they feel better. They just do. Other than that, factory production numbers, retail sales, it's all been atrocious and going lower. And you also see M2 money supply declining, which has a direct correlation to market action historically. So when M2, when money in the system declines, stock markets usually follow.
Okay. All right, there it is. That's the stock part. Now let's talk BTC. I mean, at this point, I'm almost thinking like the stock trade is more exciting. What is going on with this thing, Garrett? It's just stuck. Can't go up, can't go down. I'm sure the coiners are freaking out because they thought the ETF proposal from BlackRock was a gift from the market gods. And we're looking at the same level since like our last 3 interviews.
Yeah, who would have thought? Yeah, who would have thought Bitcoin would be the quieter of the indices or the assets when you look at stocks and crypto? But I think, again, what you have is the hopium of the ETF, the spot ETF from BlackRock. You have potential for big money to come in, which is kind of keeping buyers setting up here. But the other side of the coin is that you haven't seen Bitcoin rallying with all these technology stocks, which in 2021 it did. If you saw Nvidia up 5%, Bitcoin would be up 10% on that day. So that's a concern to me, and I continue to be watching this 30,000 to 31,000 level, which we've been stuck in now for a month. If we are able to break above 31 and hold, I think we go to 35 at least. But if we break below and hold 30,000, there's a quick drop to 26,000 to 27,000 on the horizon.
All right. That's not too far from where we're at. So you're kind of thinking that it's got it's got to fracture before it really breaks.
I took one little long there at the bottom.
Yeah, so one of the things
Did
I'm
it.
looking at is this: is that my worst case, and we talked about this the last few times, is that in the worst case scenario for
Mark
me,
wants to
Bitcoin
get back
goes
to some kind of
12,000,
safety.
maybe 9,000.
Maybe
The
this
only
last
way
little
that happens is if you do
bear
see
flag.
a major drop in the stock market where you see a
It's only
run
3:30
for
though. We still have
risk
30
assets.
minutes.
So if, let's say, the Nasdaq were to go back to October lows or lower over the next 12 months, to me that would be a likely scenario where asset or money would be running from Bitcoin as well, and you could see those lows. Otherwise, I think if we just kind of go steady and just chop around,
He's saying new lows,
Bitcoin likely holds above
new October lows
20,000
before
and
next year.
eventually breaks higher.
That's kind of what I'm thinking too. No one's usually. I haven't heard anyone that's quite that aggressive though.
There it is. All
They
right.
pull on the most
Thanks,
bearish
Garrett,
people when the
for
market's down like
update
this.
on the process. Sticking with the bearish positioning. Thanks, Garrett Solly, Chief Market Strategist at InMoneyStocks.com. All right. We didn't book the bearish guys just because the market was down. That was just in the plan. So it worked out kind of conveniently.
Oh my gosh.
3 A's from Tom.
Are you listening to
4 if you
me?
count the 2 in American. All down today. We'll trade Amazon Ally as well.
That was pretty weird. Phone won't charge? Oh yeah. My port got kind of weak also. I just switched to wireless charging. Kind of a hassle. Stick with that until I get sick of it, and then I just get a new phone. That's how they operate. I mean, there's a reason he's trying to deny it. Oh, I'm just kidding. I'm sure that was all scheduled way in advance. But maybe they knew the market was going to dump today. Maybe they caused it. Bum, bum, bum. Charging super slow? That sounds more like your cord or your adapter than your phone itself. Oh. Charging, oh, wireless charging. It's a little slower. Slower is better for your battery though. And I don't know, my lifestyle, I'm fine to slow charge it. Just being at a desk. I don't even actually charge, I keep it around 50% as much as I can. So now that I'm having a wireless charge, it's harder to keep it around 50%. Still waiting for phones to allow you to just charge up to a certain level. It's like, seems like such easy tech, but I've not seen a phone that has that yet. Who wouldn't want to fully charge their phone? What are they, nuts? Sponsored by OnePlus. Is that still a service? Is that a phone? That's a service, isn't it? I'm not doing a video today. The TA I mentioned yesterday is all that, I guess it wasn't yesterday, that was 2 days ago. That's all that really mattered, now it's played out, so today's video would just be I told you so. guess I could give people some comfort. This doesn't mean it's just going to keep going down. It is a phone company. Yeah, actually, speaking of that too, Ace. It's really weird. My phone, I think it's like just my phone actually charges with some chargers now and not other ones. Like when you plug it in, it's just the cord and the adapter. It's not getting like enough power, and your port's pretty crappy. It won't charge, but I can still charge with the plug-in on the more powerful, thicker gauge cables. Yeah, those other four are probably thinner gauge and just don't push enough current. Is that what you're running, Granted? Is a OnePlus? Shorter cable helps, but usually it's just the quality of the cable, how thick the gauge is, how old it is. I mean, shorter technically is better, but like with phone charge cables, that's not really a factor. Bloomberg Terminal OnePlus. The Bloomberg Terminal, it just compiles all the data that we can get online. There's really not a whole lot that's like proprietary on there.
Maybe that'll give them a little bit of a boost heading into
For those of you that are
shopping. But this is all going to be about earnings.
fiends.
AWS. I think the key for this earnings report for AWS is the deceleration in the growth rate. Will that?
I mean, it does guarantee six-figure profits though every year, so you know, it's something to consider.
Maybe some of their market share. If that starts to bottom
And then
out,
if you get that
see a
sixth monitor,
and I
add
think
another
that's what a lot of
50K
people
onto
are
that.
expecting. That's why you're seeing all these price target hikes into earnings. But we saw some call buyers in here too, and they went out to the September cycle, so not necessarily doing an earnings play here, but over 5,000 SEP 150 calls were bought up for an average debit of about 215. So that break even of 152.15 over the next 57 days is about 17% above the current share price, with call volume double puts right now, nearly 500,000 calls traded on the session. So even though we're seeing some of these stocks pull back, you're still seeing that bullish activity in the option market at least. Yeah.
Well, I mean, can you blame traders after watching these just rip?
Yeah.
A lot of folks are going to try and jump in on the first down day in a while
Yes.
to, you know, get on the right side of the
We really need to
trend,
break
because
kind of
the
this
short-term trend is definitely
this area
in
to
favor of the bulls. It's just for Amazon,
have a nice longer
Tesla,
bullish trend.
the stock you're going to talk about here.
I think we should probably see a bit of a bounce tomorrow.
Long term are still bearish. The 1 year plus Amazon chart is still bearish. Tesla 1 year chart plus. And once you get past that 52 weeks, trend's still down. All right, Ally, why is that in the mix here?
Down 2% today, still up 18% this year. They had earnings yesterday, pretty good report. The stock jumped on the news yesterday. Worse guidance than they anticipated across the board. Even though
Definitely
they beat on
bearish
EPS,
though. Yesterday's candle,
they,
that
reported revenues
big
just above
doji, double
expectations.
doji.
Their net financing revenues were down
Today
by
now making his
nearly
head and
11%
shoulders.
from prior year. Decline due to drastic rise in interest rates on
Yeah,
deposits.
we might not have a Green
Deposit
Friday
flows,
actually.
kind of weaker
By end of day, it probably won't
it
look very
hasn't
good.
fully taken part in the rally that we've seen, but we did see some call buyers in here also for this company, because this is it's one of those stocks that
Depends on how
trades
today
a
kinda
lot
closes,
on a
too.
daily basis, but it's not like a big name.
Make it all the way
I
back
think
up to
it's 'cause it's a
VWAP.
lower price stock, and some meme traders make it in there. There's some short interest in this name, and then you've got the The loan repayments for
An ally?
Student loans
coming up soon.
coming back soon.
Starting to think about some of
that
these
might be
companies
a
a little bit.
boost for them. But September 34 strike calls, they bought over 10,000 of those, average debit of 15 cents.
They paid
So
dividend?
that break even at 34.15 over the next 2 months. That's 18% above the current share price in there, with call volume about 3 times normal daily average volume that we've seen over the last week of trading.
Boot off state, boot out of chat?
Somebody after that earnings report piling in, thinking we're going to continue to move higher. And
Or
Ally's
did he
one of
go
those
on?
names that you can easily see a 10 or 15% move in a day.
I paid like 40 for it.
But these are
Barbecue's
really cheap,
getting a little
YOLO
frisky with that resistance again.
for, somebody taking an Ally.
All right.
15 minutes to
Big
close.
trades on dips and 3 stocks. Thanks, Tom. Coming up, Janie's going to give us an update on the movie biz. The reviews are in for Oppenheimer.
Might be all we get
and
for the
Barbie.
upside.
Pretty stellar. You might be able to just sit wherever you want for the same price, as AMC's going to make some changes. Then after that, we'll trade FX and some commodities. Be right back.
Want to show my Discord? Yeah, I saw something about it. I don't know if he went on the show or if he just banned from chat or... Okay, I'm closing that long. That was a fun little bounce trade. Cracked a joke. You can't be joking too much when people are so emotionally invested. Married to their stock. GME flat on the day. Maybe trying to even go green. Tesla coming up a little bit end of day here. 270s VWAP. Tensions are high. Because all their position sizing is ridiculous. I don't know how though. Everything they say is bullish, no matter what it is.
Returning to movie theaters and things normalizing in the rest of the world. So
Jenny.
we were seeing
Jenny likes the movies.
mid-aisle seats located in the center of the
She
theater,
sits in the middle.
and less for these undesirable seats.
He sits in the middle, Jenny.
These screens that are only
He eats
after 12
popcorn.
p.m. So I honestly thought this was a really weird move because theaters are already
That's
pretty
their wedding money?
expensive, as I have already planned to go see Oppenheimer and Barbie, and it's honestly not cheap, and it's only going up. This was odd, especially right now.
Oh, that was their initial purchase, or
But I understand
what do you mean?
move. You're just trying to
Is he averaged in or something?
your consumers, but this was not
And
read
what's
well.
wedding
This
money?
is the latest string of attempts.
I got paid to get married.
The ego on you.
The ego on you.
He has been very active on social media.
Thanks, Ace. Appreciate the gifted membership.
About NFTs. I think this is just the latest.
She's home. Yeah, you guys are all taking notes. Trying to figure out where she lives. Thanks again for the gifted membership. TJ, Jay, you've been gifted a membership by Ace. Same with you, Buzzin'.
Yeah, well, the only theater stock pretty much is
Well,
the ego on you.
well-deserved patrons of the channel.
Not even moving. It's like it's just
Got banned from chat.
AMC. It's wild. I'm pretty
Yeah, your trolling doesn't go off very well, Dink. It's gonna call you Dick.
frequent moviegoer. I thought the idea of paying for the quality of seats was a great idea.
Can be
The fact they're going back on it tells me that
aggravating.
Yeah, to your point, they didn't really put much
Thanks,
thought into it.
Ace. Another gifted membership. Jay from the Bay. Look at all these OGs getting it. Not really OGs, but
And I do that. I submit to that.
new
business
Gs.
model.
Do you think they would pay us to sit
But
up front?
well committed.
in Oppenheimer? Like, who's doing the... Man, I want to know if anybody's doing the front row for Oppenheimer.
traffic.
That's not exactly
She does it right.
the movie I want to see up that close. But if they were going to pay me to do there for cheap, it's possible because it's hard to get a seat otherwise. Thanks, Jenny. Congrats on getting seats to both of them. All right. Let's
Barbecue
get
up at that
serious.
resistance
Let's talk
again.
markets here. Bonds selling
Could
off.
break out in a day.
Bob Icino joins us
Oh,
from Path
back to
Trading
VWAP.
Partners. So jobless claims come in a little bit too good, I guess, this morning, Bob, and it's kind of another wrinkle in our
Granted, you
sell-off
win this
today.
one. Thanks, Ace. Appreciate it, man.
You know, I think when a lot of people look at this week's performance in yields specifically, I mean, you're looking at yields having dropped 8 of the last 9 sessions at settlement. But if you look at this week, 10 years actually up about 9 basis points. So you're still seeing
ego
these
on
extra
you.
pockets of strength that keep popping in, and the chart.
George is quite delayed.
I'm a believer in a 3% 10-year somewhere by the end of this year. The charts haven't broken down yet. They really haven't. If you were to
She
go
goes to the
against
movies
a
by
weekly
herself.
chart, for example, and look at the 10-year, you'd be targeting somewhere in the
I don't know how she's become
range
the
over the
Dos
next few
Equis of
weeks.
women.
Now, if you take it versus what, let's say, the CME Fed Watch Tool is predicting, obviously that's not the 10-year, but it is sort of the rate narrative. It has 150 basis points priced in through 2004. Now, if that's the case, then that 10-year has to drop, if that's actually the case. But I would bring up that it may not be the case simply because if you looked at where yields were, let me rephrase that. If you looked at where the CME Fed Watch Tool had...
I was trying to find one of those
the Fed funds rate,
barbecue Twitter spaces today.
they had
Jump in and listen
this year. They
or
had
talk.
the first cut coming in July.
They don't usually do them during the day, though, huh?
Subsequently, about 250,
I'm like the only one that does stuff during the day.
Cuts going all the way through 2024. So the market dynamics can change very quickly from a yield perspective.
Yeah, it seems
I did comment on someone's TA yesterday, though. It was pretty good. He was calling out his big head, inverse head and shoulders.
The dollar now for a couple days.
Like, yeah, but I think we need to.
I don't want to make too much of it because
I think we need to finish the make a little handle because that cup.
It does kind of get you wondering about maybe
So the shoulder here, and a head. Not perfect, but
possibly next week.
like you have to break that neckline,
I mean, the dollar
which
has a
will be
lot
that
of
break of like 40
obviously,
cents.
And I think a lot of that was based on what we
But yeah,
saw
I
in the
tweeted and I said, I think it's gonna have to come down, and I didn't even realize this gap was here. But I thought make a handle
and you
first.
had lower than last month's inflation. But again, that's one of those situations where
Then I think he agreed once
and the very same
started to do
day
that.
when we
Maybe
got
I don't know.
those UK inflation levels, we had deputy governor for markets.
Maybe he was thinking that anyways.
Is it Ramsden? I think it's Ramsden. Say that he'd like to see QE sped up to somewhere in the
I'm
range of
bouncing some
8
more there.
billion pounds a month.
10 minutes of Fugazi.
So the central banks are not reflecting the way that markets are reacting to data. And if you go back to the entire sort of narrative of, is this a recession, is this not a recession? The EU already had their recession because they used the old definition that we don't use anymore. But if you look at it from that perspective, this is going to be one or is it not going to be one? Jobs lag. Jobs is the lagging factor in recessionary environments. So are we going to have one? Are jobs going to start to collapse at some point? And then the rest of the market is going to believe what the bond market seems to be telling us on a regular basis right now, that the economy is slowing. Most data shows the economy is slowing when you start looking at cycle highs. I'll give you another example. Housing inventory has started to slowly come back. Still 37% below its cycle high, which was just post the pandemic. So does that support housing prices? I don't think it does at a 7% mortgage rate.
Okay. And maybe unlikely for that mortgage rate to dive too much further after a little bit of resetting with yields stabilizing the treasury market. Thanks, Bob, for the thoughts, and definitely an important part of today's session. Appreciate it. Founder Chief Strategist of Path Trading Partners. Good setup for our Schwab conversation to take us into the bell. Coming back, less than 10 minutes left in the day. NASDAQ still down.
Thanks, Ace. Appreciate the support, buddy. Have a good day as well, sir. You hit the like. Do it. 40. You just did it 4 minutes ago. 40. Yeah, psych you up.
There's about a 20% probability that we get a hike in September, but I also think then that opens the door to more questions that are going to be raised as far as, well, is that the last rate hike of this cycle? Or excuse me, is July the last rate hike of the cycle? And then what do they say as far as the SEP, as far as the dots come out? That's going to give us a lot of information. We know that Powell really laid out 3 criteria, or 3 kind of things that he was looking for. How fast are they going to hike rates? How high are they going to hike rates? And then how long are they going to keep those rates at those elevated levels? So I think what today's data report, the jobless numbers, as well as kind of the strong economic reports that we've seen from the June meeting up until now, Oliver, have shown that just the next meeting for the Fed, the September meeting, is going to really be interesting to watch as far as how long do they hold rates, and do we get a hike at that meeting? So there's going to be a lot of data to digest, excuse me. But I think that we have also a lot of different reports to come out between now and then. So I think that there's a lot of different information to look at.
Tell me, what's the top ranking on your list of data going forward?
You know, I think that it's got to be what the Fed has been looking at, and they're very laser focused on inflation. So I think that that's going to be a very important one. I also think that if we look at employment cost, that's going to be another important one, because so long as people have incomes, they tend to spend. And underneath the surfaces, although we have seen CPI and other inflation numbers start to trend lower, that could dictate, and that could mean that there are inflationary pressures bubbling under the surface. So
all right, there's the bell. Do we not get a bell?
One to watch. I don't think that there's
weird. We didn't get a bell.
Report. Obviously,
oh, ding, ding, ding. SPY down 0.6%.
PCE, CPI, etc.
All right,
today.
All within the context possibly of the last
still, looks like it's still making a bigger inverse cup here. So that one's not completed. We've made a couple smaller ones with handles intraday today. So looking for a bounce maybe at 4.
Da Vinci surgical system of Intuitive Surgical has had some of the most extreme ups and downs in the medical devices category the last 3 years, and right now they are up near the record highs. We'll be looking for those
probably here on this breakout, actually, like 451 area.
What's happening in the hospital,
just a little further down. So maybe that happens after hours in the futures, or tomorrow, we'll just see. And then looking for a bounce.
Discover got blasted today. Capital One held
its own. See if we do get a bounce at handle, which will bring us back up to today's VWAP. Probably end up being resistance. It is a 50% retracement. So we'll see. Barbecue down 3.2%. Not sure if the handle's completed yet. Not convinced it is. But it could be if we break this downtrend, this line, I would probably start scaling in more. Nice little double bottom today, though, on that gap fill at the 38.2% retracement, which is kind of a shallow handle, but that's fine. That's all that it is. But pretty textbook here. So tomorrow being Friday, I feel like they might dump it a little lower. Potentially even past this 38.2 and down to 32.62, which would be 50%. So that's why I just got a little bit today. We had PSQH. This thing got de-SPACed. It's up 112%. GFAI woke up, hit almost 100%, closed the day up 57%. All the runners from the last couple weeks are pretty much down today with the market, which is part of the reason. Part of the reason it's good to just take profits when stuff's up. You can always get back in. But I have enough time on these. I think if we do get another rally maybe next week, I should still be back up on quite a bit of them. Some of them are still green on that I was way up on, like NEG. Yeah, Teledog's down. We'll have to see. Thanks for the support today, little guys. Thanks for hanging out. 42 likes in the day. Well done. Thanks, Jay, from the Bay. Thanks, Guts. I appreciate you too, man. You have a good night. Thanks, Psych Up. Can it hit 15 tomorrow? Yoga. You don't know the RSI indicator? Not the time for me to explain it to you, but there's lots of resources online. It stands for Relative Strength Index. May your searching begin. AT&T? AT&T is probably not going to keep ripping. It's a very, very slow mover. Oh, but yeah, that's only $0.50. Yeah, good hit 15. Looks pretty nice. That reminds me I need to sell out of Verizon at some point. Thanks, Yoga. Thanks, Rumapabal. Thanks, Christopher. Thanks, Jay from the Bay. Thanks again, Ace, for the memberships. We'll see you guys on Discord, Twitter. Okay, peace out.